Good morning, fam. The account might be gone again. Today's going to be a chill stream. Trump got oil at $80 a barrel. What, you made 3K off of this little pop? Bro had 50 contracts. Yeah, GME pop. Yeah, Meta's about to go crazy. I should have just went all in on Meta to save me. I should have went all in on Meta to save me, bro. Meta could have saved your boy. Should have went all in on Meta. All in on Meta. Meta could have saved your boy. Meta could have saved me. Could have saved me. Could have taken it. She couldn't tame me. Now I'm ace of spades. Bullish, tired of charades. Running shit like a parade. Money over everything's what you say. You know what it be. RIP to everything except the beat. Except me. Bless me. Check me. Reckless. Diamond crazy colors on my necklace. Can you check this? SPY looks like it is gonna go up. Especially if it breaks this orange line. Oh shit, let me make a title and make sure the ads are on and shit. Okay, Spy's breaking the orange line. Spy's breaking the orange line. Let's go. This is what I need. It's exactly what I need. Misty Blue reached a 65 stream streak yesterday. Bano, what up? The mods are here. The mods are here. Come on, Spy. I'm screwed. I'm cooked. If we don't get above this, if we don't start pushing up, dude, I'm cooked. My whole account's cooked. I might be full fucking cooked. I might have to add like 500. I think I blew the whole 1,000. I'll get it back. I always do. Damn, I over leveraged, bro. So stupid. Gotta be careful. This shit is not a game. And if I do go in this heavy, I think what I'm going to do instead of going in multiple contracts, I'm going to go in longer dated contracts. Like SPY calls that are dated 3 days out, 4 days out. Because it will still give me the value. And it will still give me a lot of delta when it makes a move. But I won't have a bunch of contracts that expire the next day. I think it's better to get more time than multiple contracts. That's my personal opinion. In my opinion, it's better to have more time than multiple contracts. So I'm gonna start paying for the time instead of multiple contracts. I learned my lesson already. We're gonna start paying for time and not multiple contracts. So like 3 days out, 4 days out, 5 days out, 6 days out. AMC is about to go for the 190. AMC tracking. We should have an update today. Let me just move everything down. If oil wasn't so high, the market would be pumping right now, dude. Fucking Trump, dude. I hate Trump. I really do. US and Iran war reignites over Strait. Like, come on, dude. This doesn't help Americans. Oil rises to 4-week highs. Like, this doesn't help America, bro. This doesn't help America. America first, dude. America first. I'm full cooked. Yeah, Trump has everything fucked up, guys. This is just gonna be a chill stream for me today. I know that I don't want to put down anyone's vibes or energy right now. I don't want to put down your vibes or energy right now, guys. So just try to stay positive no matter what's going on. Me personally, I'm just gonna chill today, guys. It's gonna be a chill stream. Yeah, we're about to pull back. We couldn't get the momentum we need to break. Stupid ass Trump, dude. The market would literally be soaring if he wasn't president right now. Donald Dump. Yeah, he's ass, bro. For real, dog. Dude, if the oil wasn't so high, the market would literally be soaring, bro. Inflation just came out way better than expected. Yeah, inflation came out way better than expected. Negative 0.4, 3.5, 2.6. Inflation came out so good, bro. Do you guys want the Fed testimony on? Maxine Waters, her dumbass.
Your first meeting, you announced a number of welcome reforms, including establishing 5 task forces that many members are eager to get your thoughts on. For example, former Chair Powell had committed to review some of the Fed's communication tools. And although we expected that to be completed last August, alongside the review of the consensus statement, it is yet to happen. A review of the Fed's communication tools is long overdue, and we look forward to your focus on completing that project through the task force. We also spent time this Congress examining the composition and the size of the Fed's balance sheet, an effort that you are now undertaking at the Fed. It is vital that the Fed get this right.
Too, bro. I'm telling you,
we welcome continued collaboration on that front. And I have a lot to talk about today. I look forward to your testimony and our discussion, and I yield back, Mr. Chairman.
And
thank you, Mr. Lucas. I recognize the ranking member of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Vargas of California, for 1 minute.
Oil's $80 a barrel. My bad.
Thank you, Mr. Chairman, and Ranking Member Waters for calling this hearing. Further, thank you, Chairman
Everybody's
Ward,
scared
for coming before this committee, especially so early on after being confirmed. Public service is a noble undertaking, as you know, so thank you once again for taking it on.
Any rallies that happen,
I enjoyed our
it's not by the
conversation
dip
last week, and as ranking member of the Task Force on Monetary Policy, Treasury Market Resilience,
because of the fear
and Economic Prosperity, I will remain vigilant of the actions you take as chairman. The independence of the Federal Reserve is my top concern. No influence from the president or others to to raise or lower interest rates whenever they want to. That independence is one of the essential pieces that maintained the strength and reliability of the U.S. monetary policy. I encourage you and the entire Federal Reserve to keep that independence for the betterment of all of us, not just a few. With that, Mr. Chairman, I yield back.
Gentleman yields back. Today we welcome the testimony of the Honorable Kevin Warsh, Chairman of the Federal Reserve Board of Governors. Chairman Warsh, we thank you for taking time to be with us today. You'll be recognized for 5 minutes to give an oral presentation of your written testimony. Without objection, your testimony will be made part of the record. I now recognize you for 5 minutes.
Thank you very much, Chairman Hill, Ranking Member Waters, other members of the committee, good morning. It's a real privilege to join you. At my very first appearance here before this panel, I'm particularly honored to represent my superb colleagues from the Federal Reserve System. In submitting the monetary policy report, as is our obligation and our duty, I think of a long line of central bank chiefs that have appeared in this very room before Congress in keeping with the Federal Reserve Act. One of the largest figures in Federal Reserve history is Alan Greenspan, who passed away about a month ago after a century of life. We at the Fed recall the chairman's strong and steady leadership, his strong hand, in a period of rapid economic change. And today we honor his memory. As a country, we just marked our 250th year. And when Americans count our blessings, we include an economy predicated on the brilliance of our constitutional design and a system of ordered liberty.
I just sold everything for a loss. The account's at $200, so I lost $800. Type a 1 in the chat if you guys want the testimony, or type in the 2 in the chat if you want music. 1 in the chat if you want testimony, 2 in the chat if you want music. 1 in the chat if you want Fed POW testimony. 2 in the chat if you want music. All right, so we have 2, 1, 1, 1, 1.
Mandate that this committee gave us, and we will. We've got full ability to do it, so you will
Thank you.
not hear me blaming anyone else.
Thank you, Mr. Chairman. My time has expired, and I recognize the ranking member, Mrs. Waters, for questions for 5 minutes.
Thank you, Mr. Chairman. Chair Walsh, Section 10 of the Federal Reserve Act states, and I quote, "No member of the Board of Governors of the Federal Reserve System shall be an officer or director of any bank, banking institution, trust company, or Federal Reserve Bank, or hold stock in any bank, banking institution, or trust company," quote unquote. This prohibition ensures there's no conflict of interest arising from your role in making decisions as a regulator that could lead to your personal profit. Yes or no? Do you think that's a sensible prohibition?
Check your mic, Mr. Chairman.
Excuse me, Ranking Member. It's the law you've written, and it's the law we will follow.
Let me keep going. Vice Chair Bauman and FDIC Chair Hill testified last year that this prohibition is good public policy as it ensures that bank regulators serve the public's best interest and not their own. Now, unfortunately, President Trump undermined the independence of financial regulators, mandating the White House must now review and approve regulatory rules put forward by banking regulators, including the Fed, except when it comes to monetary policy. And instead of focusing on the job Americans elected him to do, the president grossly profiting off of his position to the extent the president and other executive branch officials now have a say in regulations in the Fed issues. Chair Walsh, should those officials be prohibited from owning any businesses where they have a role in regulating them, whether it is crypto company or bank or anything else? Yes or no?
So, Ranking Member Waters, I don't mean to disappoint you, but we're going to stay in our lane at the Federal Reserve. The more we stay in our lane, the more we stay out of politics. The rules and obligations for others outside the Federal Reserve are not something at which I feel it's appropriate for me to opine.
I have here President Trump's most recent financial disclosure, which shows that Trump made billions of dollars in the first year of his presidency, the bulk of which came from his family's crypto businesses, all while he is responsible for overseeing the agencies regulating crypto. This is an egregious conflict of interest, and Congress must put an end to it. Now, I want to just show you, in case you haven't had time to look yet, that this is the president's disclosure of his financial interests. This is, how many pages? 900. This is 900 pages of financial interest. When you have time, I want you to go through them so that you'll know and understand exactly what I'm talking about. So let me ask you, do you believe we must put an end to it?
Ranking member, you've given us a big job. We've begun in 6 short weeks to tackle the big job, and I'm focused on that.
Well, let me just go further with the prediction markets. I'm deeply concerned by the potential for regulators to profit from the use of material non-public information on prediction markets. There's a pattern of insiders appearing to profit ahead of market-moving Trump administration decisions, like when officials with close ties to the administration make trades prior to major tariff announcements. Chair Walsh, what oversight does the Fed conduct over its employees with regard to insider trading? And given the rise of prediction markets, is the Fed increasing its oversight for its employees profiting from the use of material nonprofit information?
Ranking member, at the end of my very first week on the job, I sent a letter to the 23,000 employees of the Fed, reminding them the best of the Fed's traditions, which is our culture. And included in that culture is integrity. Included in that culture is ensuring that we abide by the law and the very highest standards. That's a commitment that we've made to each other and will make to you.
Well, thank you. Chair Walsh, in 2019, I posed a simple question to former Chair Powell. I asked, if you get a call from the president and he said, I'm firing you, pack up and it's time to go, what would you do? Chair Powell said, of course, I would not do that. The answer would be no.
Gentlewoman's time has expired.
I asked further, he does not want me to go any further. Do you think the president doesn't have the
He can
authority?
answer that answer. He can give you an answer in writing, and I'm sure he will do that
want the
in a
public to
timely
hear.
way. Thank you so much. The chair recognizes the chair of our Task Force Monetary Policy, Mr. Lucas of Oklahoma. You're recognized for 5 minutes.
Thank you, Mr. Chairman. And Mr. Chairman, I want to start off discussing these task forces you've created. Clearly, Chairman Hill's monetary policy task force idea is catching fire as we see this go across the landscape. What do you anticipate the result of the task forces to be? Can we expect public reports or other documents? How do you envision presenting the results of these findings, Mr. Chairman?
Thank you very much. Right now, they're in discovery mode. I've given the 5 task forces a tall task to go back to first principles, see what we're doing, see what can be improved upon. They were starting with a blank sheet of paper, and you had a highly credible central bank running the most important monetary policy in the world. What would we do? Are there existing practices we could improve upon? Are there hard questions we could answer? The changes in the economy relevant to that? In terms of disclosure, we're going to make sure that the external independent task forces, which are staffed by some superb Fed staffers, that they get to share their views first with the decision makers. There are going to be 19 of us around the table that are committed to listen to them with an open mind and make decisions, but there's going to be nothing held in secret here. This is a public discussion on these 5, and I'm happy to share the results and the thinking periodically between now and the end of the year, at which point I hope we've got some real conclusions.
Of course, the committee task force is very sensitive on this thing. Let's move to the communications and balance sheet. A concern I raised with your predecessor is the potential for confusion on the purpose of adjustments to the Fed's balance sheet, absent clear and frequent communication. For example, the trading desk announced yesterday it's continuing the $10 billion in bill purchases this period, presumably to maintain ample reserves. I understand not wanting to preempt the work of the Communications Task Force, but can you share your thoughts on balance sheet policy communication? Will you make it clear to the markets when shrinking the balance sheet is intended to tighten monetary policy rather than a deregulatory effort to avoid market distortions?
Yeah, You raise a couple of very good points. First, that some of the boundaries of these task forces will overlap. In some sense, each of the task forces are charged with obligations that are ultimately the FOMC and the Board of Governors. So the Communications Task Force and the Balance Sheet Task Force, there might be some overlap.
Spy
in the
pump,
work.
spy pump,
Let me
spy
cut to the
pump, spy
chase.
pump.
The balance sheet policies since the global financial crisis when I last served, the balance sheet regime has changed quite significantly. The size and duration of assets the Fed's holding have changed massively. They changed first in a period of crisis. That was the design of this new balance sheet policy. I don't want to prejudge decisions that this task force makes, but it's no secret of my long-held views, and I'll just state them three ways. One is the balance sheet is part of monetary policy. Monetary policy is made both through interest rates and through the balance sheet policies. The balance sheet isn't merely about plumbing. So that's point one. Second, I want to assure you that if there were a change in balance sheet policy, that we would preview it, explain it, debate it, and no changes in balance sheet policy would happen without good advance notice to the likes of this committee and broadly financial markets. And three, as we think about balance sheet policy, we at the Federal Reserve have to do, I think, a strong and compelling job to stay clear of fiscal policy. We want to be out of the fiscal policy business, which is between you and the Treasury Secretary and the President, and focus on monetary policy. Those are among the big questions I've asked this group of three distinguished leaders to take on, and I look forward to hearing what they have to say about it.
The composition of Treasury purchases continues to trend towards more price-sensitive market participants. The MPR details this trend along with the strong demand and increased liquidity, though we know from experience conditions can worsen quickly in the crisis. How are you thinking about financial stability and the threat of fiscal dominance as Congress fails to get spending under control while the demand for our debt, including the Federal Reserve, continues to change?
So it's an excellent question. As we sit here today, the average duration, that is the average outstanding stock of assets that are held by the Fed and U.S. Treasuries is about 6.5 years. The Treasuries that held in the market are about 4.5 years. I understand in periods of crises, like the 2020 pandemic and the 2008 crisis, central banks by design needing to step into markets to create a fair price. But in more benign times, when our overall holdings are larger than the market, that's something where monetary policy is, in the language of former Chairman Volcker, on the edge of its authority. These are among the questions that this task force will look at.
Thank you, Mr. Chairman. Yield back, Mr. Chairman.
Gentleman yields back. Chair recognizes the ranking member of the House Small Business Committee, Ms. Velasquez of New York, for 5 minutes.
Right here. Welcome to the committee. I would like to start with a straightforward, simple question. Do you work for Donald Trump? Yes or no?
If I'm permitted to say, we're an independent central bank. We're honored to be independent. Our independence came from you.
Okay, that's enough. Thank you. What steps would you take if the president or others in the administration target you or your fellow governors because he doesn't like how many of them are voting on interest rate policy?
So it's not my intuition to engage in hypotheticals, but I'll tell you this. The Supreme Court said—
That's an easy way out.
The Supreme Court said that the Federal Reserve and the conduct of monetary policy is independent. To the extent there were questions about it, the courts answered those questions.
So what would you do?
I would continue to do my job.
Okay, good. Chair Walsh, do you agree that current monetary policy exists in an extremely polarized and politicized environment?
Outside the four walls of the Federal Reserve, there's no doubt a lot of politics. But my goal inside the central bank is for there to be no politics. To the extent there's politics there, we're going to get rid of them.
Well, I, along with many on my side, will say that the attempted firings of a sitting Fed governor and Fed chair in the central bank's 111-year history is quite the politicization and polarization of the Fed. Chair Walsh, at your nomination hearing a few months ago, you said, and I state, I am committed to ensuring that the conduct of monetary policy remains strictly independent. You just said that. Are you still committed to conducting independent monetary policy today?
Absolutely.
Given the current mistrust of government and the political environment surrounding your appointment, the decision to limit communications and offload Fed objectives to clandestine task forces with no clear transparency calls your motivations into question. Can you commit today to institute an explanatory framework that details the reasoning of the Fed's actions following policy changes?
I'm here today, Congressman, to do just that. And I think I've demonstrated in my first 6 or 7 weeks in office a commitment to independence and a commitment to reform. Those two are of common importance, and I'm going to deliver on both of them.
I'm glad to hear that.
Thank you.
Chair Walsh, at your first post-AOMC meeting as chair, you were asked how you intend to handle Fed communications going forward. You answered, and I quote, "We made some changes today. I expect more changes to come, and some of those might well be worthy of a press conference." To me, that is not a very definitive standard. Can you commit today to creating a fixed public standard for which FOMC decisions and procedural changes trigger a press conference?
All right, Spider's got a
rather than
decent pump out of that little
deciding
wedge
case by
right there.
case which ones might be
Pulling
worth
back now
yes
from
or
that.
no?
So if I can be a slightly longer than yes or no, the last 63 months, maybe 64 months of high inflation above the Fed's objective suggests that
QQQ
it
coming
is
back a little bit.
immediately important to think about reforms, including in communications, and that's what we're going to do. I don't expect any of the change in communications to
got
be
a
about
nice
hiding the
push.
ball. The purpose of a change in communications is to do one thing right,
Meta's
which is to
going
get
crazy.
monetary policy
I
right.
hear you, but are you instituting any standards that will qualify for a press conference as a worth news for the public and hear us in Congress?
So in a word, yes, and we have a task force that's going to help us think about how to do
Yeah,
that.
Apple
and do
had a
better
bear
job
flag,
of
bro.
getting policy right.
This
making
was a bear
sure
flag.
that you
Apple has
know
a gap
what we're
fill to the
doing and
upside,
why.
though.
Can you give me a single
This is
objective
like a little bit of a bear flag
or
type
criteria
style.
right now on how you will
Apple's gonna go back
determine
up, though,
whether
bro.
or not a change at the Fed is significant enough
Look at all the
for you
buying.
to hold a press conference on it?
Mr. Chairman, I'd invite you to answer that question in writing,
And then
please,
Amy's
for the
at
gentlewoman from New York.
189.
Chair
GameStop's
recognizes the gentleman from
2231,
Texas, Mr.
guys.
Sessions. You're recognized for 5 minutes.
Mr. Chairman, thank you very much. Chairman, welcome. We're delighted that you're here. This is your first time here, but you'll get used to coming back. You'll be here twice a year, so your report to Congress is important, and we do count on the factual nature of that. I'd like to refer, if I can, to 3 questions and allow you to speak instead of myself most of the time. Number 1, housing interest rates, that would be on page 21 and 37. Then understanding better the agricultural stability of that marketplace. I represent a hugely agricultural district. And second, or lastly, the labor market outlook, that's page 16. I'll let the gentleman please move forward, and I'll prompt you now on the first one, housing interest rates. You would please talk to us, your view of that. It's higher than what I want, but you're the person that's in the seat today.
So as I mentioned in my opening statement, prepared remarks, the economy is solid. Financial markets look like they're in very good condition. But when we look at housing markets, the story is much more uneven. 30-year fixed-rate mortgages, which is really the relevance of much of this discussion to a lot of hardworking Americans. It's higher than it's been, and in part, that's because of inflation that has been above the Fed's objectives.
Okay, and looking forward,
So we have
your goal, what can we look at you and say, What is our new chairman going to do about that?
So he's going to deliver price stability with his colleagues at the FOMC. And what we can do in making sure that people are confident that the change in prices is
Yeah, I think
at such a
Apple will be
level they
fine.
don't have to think about it and they don't have to talk about it. That is consistent with long-term treasury yields being lower, and that's also consistent with mortgages
Can you
being
guys
more
hear the
affordable.
speech?
Well, I agree with that, and I'll look forward to that. Agricultural outlook, as you know.
I still have a day left on my call.
Farmers, the farm economy is going through some changes. Your viewpoint on that?
As you know, the Fed does not target particular sectors, but that doesn't mean these sectors aren't incredibly important. The housing economy matters to the economy, the overall economy, and so does the ag economy. It's the breadth and diversity of the U.S. economy that gives it its strength. It's the dynamism of what's happening in each of these sectors, including in agriculture, that gives us great comfort that economic growth can be materially higher than it is. We are not afraid of productivity-led growth, and that's not unique to AI. That's across all sectors of the economy. As I mentioned to Chairman Hill, we're looking for growth to be broader and the change in prices, the inflation in prices to be more limited. Agriculture is not immune
Dang,
to
we
either
only
of
have
those
16
developments.
Well, the
subscribers. What the
Agriculture
hell
Secretary has
happened?
been added to some of your important committees
How
to
did
make
we
sure there's
lose all
discussion.
of our
I hope
subs?
that you will listen to her. It is important for you to understand that when people talk about the stock market or investment, farmers and ranchers look out in their backyard at the cost of their equipment, at the cost of their land, at the cost of things. They don't have a stock market. They have their own investment. And I think that the Secretary can be there to completely continue to remind you of that. Labor market outlook really looks good. Page 16, sir, your take.
Yeah, so the labor market has been remarkably resilient. The increase in nominal wages has been solid. You might have heard in my comments at the beginning of this a bit more focus on the price stability part of the mandate. I want you to know, though, that there is no disfavored part of the legislative remit that you gave us. The dual mandate is your word to us that we're going to focus on price stability and on full employment. I intend to do just that, and if I could add one other thing, in my view, the two parts of the mandate are not in conflict. This is not an either-or proposition. The more we can do to deliver low and stable prices, the more we can get it such that people aren't worried about inflation, the more employers are going to want to hire more workers. So you gave us a remit. We take both parts of it seriously. As we look out the window now, the labor markets look to be in pretty good balance. We've got some work to do on the inflation front.
Well, we, in the One Big Beautiful Bill, encourage people to go back to work. And that is why we do not tax overtime pay and why we do not tax what would be tips. We need to get people back in the marketplace. We hope you helped us out, Mr. Chairman. Welcome to us, Mr. Chairman. Thank you for your time.
Gentleman from Texas yields back. Chair recognizes the ranking member of our Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Mr. Chairman, first I want to commend you for looking to improve the data on which you base your monetary policy decisions. Up until now, we've relied on survey data as a substantial part of that, and increasingly Americans just don't voluntarily answer survey questions. I want to commend you for declaring your independence. We saw what happens in Argentina, Venezuela, and most notably Turkey when federal central bank independence is eroded. I would say ironically that had your predecessor caved to Trump and lowered interest
couldn't get
rates
out of that
below
spy
what
plot fast enough, dude. I
economics
tried
would
to
call
exit all
for,
my positions and
we
I
would have
couldn't.
much higher inflation today, and that would have been bad for Americans. It
So
would
I
have been
got caught up.
absolutely terrible for the Republican Party. So the independent, your agency
coming
has
back
saved Donald
down.
Trump from himself. And finally, I would say don't rely on this distinction between the Cook and the Slaughter cases. The idea that every congressionally created independent agency isn't independent except yours, you don't want to be relying on that. The distinctions the court makes between your agency and every other agency are,
Yeah, AMC is gonna go up, like I said.
our
Today
capital
should be an
markets
update, like I
support
said.
our business expansion and our economy. Money market funds are an important part of that, buying short-term commercial paper from corporations. Our payment system is designed to meet the needs of honest Americans.
Yo, thank you
That's
for the
why we
follow on
have
Twitch,
an
bro. That
anti-money
helps out a
laundering,
lot.
Know your customer rule that makes it
If you
a
guys wanna
bad
help out for
system
free, like,
for
subscribe, and
drug
follow. We're at
dealers, sanctions
166
evaders, et
followers.
cetera. There's a rival to these institutions, and that is a cryptocurrency, which literally means hidden money, and is designed to, and then we have in particularly stable
AMC's going up,
coins,
like I said.
which are just like a money market fund, except you earn zero interest, and everything is hidden.
Told you guys today would be a green day.
Now, the Federal Reserve established liquidity facilities to support money market funds in the last crisis. Will the Federal Reserve support cryptocurrency or stable coins if they face a run-on from
AMC
investors?
pumping towards gap fill. AMC pumping
So
towards
Congressman,
gap
thank you for mentioning many of those issues. We talked about a lot of them in your office, so I appreciate it.
See how it pumps out of nowhere?
Still have the
You never know when
scars
Amy
from
could just
the
pump.
2008 financial crisis. I
We all
still have
do.
the scars from the extraordinary efforts that my colleagues and I, under Chairman Bernanke's leadership, had to do. That is not something we want to repeat.
Can you
The
assure
reforms
us
that we need are
that
to
you
try
will
to
not
mitigate that.
be bailing out stablecoin and cryptocurrency?
So I don't want to, I can be more broadly than that. We do not want to be in the bailout business, full stop.
But your predecessor did provide a liquidity function for money market funds. If, God forbid, we faced a similar circumstance in the crypto world, would you bail them out?
So I want to be very clear. We're going to do everything we can to mitigate those sorts of extraordinary risks. If and when they were to come in the next 4 years, we want to be in a position we're not bailing out anybody, including crypto.
You're not really answering the question. Obviously, everybody prefers our economy works well. And I'm certainly concerned with giving non-banks direct access to the payment system, and this Kraken filing with the Kansas City Fed is concerning, but I want to move on to Basel III. Your
AMC breaks and
predecessor
holds
said
$2,
that
it's time to get excited.
the capital requirements for banks in 2019 were about right. The current reproposal substantially raises those capital requirements. Were capital requirements about right in 2019, or should they be higher than that today?
The good news is we have a proposed capital rule that's out for
Yo,
comment.
Eric, thank you for the
Quite
disco
interested
ball.
in getting the reports and the comments on that, and I look forward to reviewing those and making a judgment. I would say, as a first principle, strong capital ratios, strong liquidity ratios, strong supervision, and strong market discipline, they're all of a piece to
GameStop
ensure
and
we don't
AMC
find
green today.
ourselves in
AMC's
a
green
world where
5%,
there's
GameStop's
unsafe
green
or
1.5%.
unsound institutions.
We, of course, want strong limits. On the other hand, if you go overboard, you hurt economic growth and hurt the economy. I hope in that review process you'll look at low-income housing tax credits, where you've already moved from 400% to 100%. It should be closer to 20%. These are very stable assets.
Gentleman's time has
and
expired.
my time has expired.
Appreciate you, Mr. Sherman. The chair recognizes the chair of our subcommittee on financial institutions, the distinguished gentleman from Kentucky, Mr. Barr.
Thank you, Mr. Chairman. And Chairman Warsh, congratulations on your confirmation and swearing in as the 17th Chairman of the Federal Reserve. I am grateful for your commitment to reforming the Fed, and that appreciation is surpassed only by our shared love for Kentucky thoroughbreds and your love of the great sport of horse racing. Let me just ask you, first of all, since you're swearing in over 7 weeks ago, things seem quite a bit different over at the Fed. A few examples: elimination of forward guidance, abstaining from the dot plot, creation of these 5 specialized task forces, and maybe most
He's about to go for
impressively,
$2.
taking accountability. Instead of blaming inflation on the pandemic or supply chain interruptions or tariffs or the Strait of Hormuz, you are saying that inflation
to
is
go for
always
$2,
and
bro.
every time the result of the Fed supporting printing too much money.
AB's about to go for
Tell me,
$2,
Mr. Warsh,
bro.
you appear to be quite different from your predecessors. How are you different?
So I've known 5 of my predecessors. I've learned particular lessons from
Oil's coming
each
down
of
a little
them.
bit.
I can only be my own man. I served before at the Fed for about 5.5 years under Chairman Bernanke, and I learned a lot of things then.
Amy,
But you're right. In
199
6
intraday
weeks,
high.
we have
199
caused, I think,
intraday
a sea
high.
change in new
199
thinking
intraday high.
put in place across
we
at
break it
least
all
5
$2,
dimensions
we're
in
gonna go for the
monetary
gap fill,
policy.
baby.
And it's a broader discussion about reforms that will be forthcoming in everything we do, including
Told y'all Amy was
supervision
ready.
and
Look at this.
regulation, where there's already been a good start,
I told
in
y'all
payments
Amy
and the
was ready.
rest. We made a lot of progress in 6 weeks, but I think it's important to use this opportunity wisely. The 63 months of inflation above target has been an unfair burden and has been a tax on the American people and businesses. We plan on getting rid of that tax. If that means we need a regime change in policy and we need new consideration of practices, some of which have been working, some of which haven't, that's what we aim to do, and we're just getting started.
Well, I appreciate your commitment to being different. Let's talk about overhauling Fed communications. This from a Wall Street Journal editorial on June 15th. They write, few innovations since 2008 have been as counterproductive as the adoption of forward guidance as a policy tool. The constant yammering, long policy statements, press conferences after every FOMC meeting, nonstop speeches by Fed officials, and above all, the quarterly summary of economic projections has exposed how little the Fed understands about the economy and trapped officials in errant policies. Chairman Warsh, why is it important to do away with the dot plot and end, once and for all, forward guidance?
Well, Congressman, I've made no secret, probably over the last 15 years, of my views on communications.
Amy
I
at
think when
196.
central bankers speak like I am before you, it's either one under obligation,
Amy trying to hold 195
or in this
support. So
case,
listen,
under
if we hold
obligation and purpose,
195,
which is to share a set
a
of new
huge
reforms
signal that we're
so
about
that
to break
American
out.
households and businesses might say to themselves,
if you
this is
want
a regime change in policy.
to help Amy,
We're only beginning
you
it.
need to drop
I'm
rockets right
keenly
now.
interested in the views of these 5 task forces, and ultimately, these are decisions that are going to be made jointly. The best of the Fed's traditions are to work collegially, and I've really been quite impressed how open-minded my colleagues have been
If
to take
Spy
it up,
flips bullish,
specifically in communications.
who, Maxine Waters, she's super dumb, bro.
If we were to share with you our every passing thought, I worry not that there's anything wrong with us, but we're human. And if we were to give you my projection today about what we'll do when we meet in 2 weeks, what we'll do over the course of the year, that we'd then find ourselves sort of taking information that's consistent with our priors and rejecting information that's inconsistent. It's not the way we want to do things. We want to get policy right, and I think being somewhat more circumspect in our communications, at least for me, is a better way of calling balls and strikes.
Finally, thanks for your commitment on dealing with this mission creep. In recent
Kevin
years,
must
the
have
Fed
said
has
something to
concerned
pump
itself with
AMC.
matters outside of its dual mandate, including diversity, equity, inclusion, climate change, and the like. That's why the Fed's joining the network of the greening of the financial system distracted the Fed from the very important job of price stability. How will you keep the Fed from rejoining the network for the greening of the financial system or veering into these peripheral and distracting matters that go beyond the statutory remit of the Fed?
By being very clear of our
If Spy
obligations.
can break
You
the
told us that our job
751,
is full employment and price
75,
stability.
it
You
will
gave us
pump
plenty of other
because
hard work to do. We'll have a series of
That's
reforms
the 20
outside of
moving
monetary
average on the
policy.
4-hour
Our
time
plate is
frame.
full. We
The
will
gentleman's
not be
time has
wandering
expired.
into other areas, I can assure you, Congressman.
Thank you. I yield back.
The gentleman from New York, the ranking member of the House Foreign Affairs Committee, Mr. Meeks, you're recognized for 5 minutes.
Thank you, Mr. Chairman. And congratulations, Mr. Chairman. Let me just jump into this, because in your testimony, you talked about the Federal Reserve's, and I quote, rightful independence in the conduct of monetary policy, which is good. Now, as the Chairman Hill has indicated, I also do some foreign affairs work. And I'm very concerned about what's taking place in the Strait of Hormuz and rising cost of gas, because we know that when those prices go up at the pump, it gives higher transportation and energy cost, and they work their way through the economy, generally making groceries, higher-end household goods, et cetera. So it depends upon handling it. So if the administration's handling of the conflict with Iran contributes to another inflationary shock, will you make the decision you believe is in the best interest of the American people and the American economy in that rightful independent stance?
Congressman, that is always our commitment, to make the best decision we can, consistent with the remit and our understanding of the world. And as I said to the chairman at the outset, we'll deliver price stability.
So, and that's, still based upon what we've seen from the president thus far. Now, I just want to be clear, make sure that, because I got to be clear on this, that if the president publicly pressures you to pursue a different course than the one you believe is in the economic, that you believe the economic data supports, will you follow the president's wishes or follow the data?
My commitment to you is to follow the law and follow the data, follow our very best judgment.
And that's even if he publicly criticizes you for doing it. If you decide this is the way to go, this is what the data shows, and he publicly criticizes you and tells you how disappointed he's in you and all of that, will you still
Amy pulling
do
back a little bit?
what
Amy pulling
the
back a little bit?
data tells you to do?
I will, Congressman.
You ready for that?
I'm ready to follow the law, and I'm ready for the Fed to deliver on the expansive remit that you gave us. I'll make only one other note. We have a wide lens. We're interested in what's happening in the war. We're interested in what's happening in military conflicts around. We have to take that all in, but then we have to shut the door and make our very best decision. That's what we're going to do in a couple of weeks.
Amy stay
That's
above
what we'll do in the remainder of my
195.
tenure.
Thank you. So now I want you to know that I support innovation, but I also believe that the Federal Reserve has a responsibility to protect the integrity of our payment system from political pressure and short-term enthusiasm. And I believe that the administration has made expanding access to fintech and digital asset firms a clear priority of his, but the Federal Reserve has long evaluated access to its payment infrastructure based on safety and soundness, operational resilience, and effective
Wanna see
risk
Amy stay
management,
above
and the stability
195.
of the financial system, not politics, not political priorities. So, can
Dude,
you...
I know, bro. They're robbing everybody. You're right.
And what I should say this also, because what I'm concerned about is that there are firms that's connected to our nation's payment infrastructure that must have robust cybersecurity, fraud prevention, compliance, and operational controls, because failures can undermine public confidence in the financial system and leave consumers exposed to significant harm. So my question is, can you commit that decisions about access to the Federal Reserve's payment rails will remain grounded solely in the Fed's independent assessment
Yo,
of
Kevin
systemic
looks
risk,
crazy looking
safety,
right now.
and soundness, and not political
He looks like he's about to
direction?
cry.
We're going to keep politics out of the Fed. We're going to stay focused on the responsibilities you've given us. And I think you highlight something very important. This new technology revolution,
Bro
which
was
is
blazing up
hitting
this
the
morning.
Federal
These-
Reserve
all
and the
these dudes
economy,
are zooted,
provides
look, high
huge
as fuck.
opportunities. The United States can lead in payments. Our economy can be the strongest in the world and improve its growth rate, but it's not without risks, and we at the Fed are going to strike the right balance between the challenges and the
GameStop and Amy
opportunities
looking
in
good today.
payments and
GameStop
more
and Amy
broadly.
looking
Let
good
me just
today.
ask this, I got 28 seconds, but
GameStop new
what
intraday high
objective standards
2240.
must any
GameStop new
firm
intraday high
satisfy
2240.
before you conclude that the benefits of innovation outweigh the risk to consumers and the broader financial system?
I like the way you think. A benefit cost test is a good test for economists like us, and if the benefits exceed the cost, then that's the kind of policy, procedure, and objective we want to pursue.
AMC looking really good, guys.
Thank you, Congressman.
We might stay above
Chairman yields back.
195.
Chair recognizes the chair of our Capital Markets
Spy pop,
Subcommittee,
spy pop.
Ann Wagner of Missouri. You're recognized for 5 minutes.
Hi, thank you, Mr. Chairman, and welcome, Chairman Warsh, and congratulations to you. My work on the Capital Markets Subcommittee as chairman has been focused on giving the American people and our small businesses more options and access to our markets, giving the everyday investor and the local employer better opportunities to grow their financial future and kind of on their own terms, I'd say. Under the previous administration, we saw a heavy-handed regulatory approach that aimed to strip risk out of our markets entirely. And time after time, the Biden-Harris administration pushed policies that limited financial freedom and stifled growth. Our capital markets are, as we all know, the envy of the world, and that is because we allow Americans to weigh risk and reward for themselves and make the financial decisions that are best for them and their families. Chairman Warsh, at a high level, how do you view the Fed's role relative to the financial system, both as a central bank and as a bank regulator? And I guess what I mean is, should the Fed try to engineer all risk out of our economic system, or should it act as a prudent observer?
I took profits
that
on one of
only
my spy
intervenes
calls. I have one spy
when
call
truly
left as a
necessary?
runner.
Dual
So,
port
Congressman, it's a leading question, which I can answer with a.
We're back to
we need to strike the right
$750.
balance. We are not trying to take risks out of markets in normal times. The economic growth that I mentioned to your colleague just a moment ago comes about because of a certain dynamism in our financial markets, which comes from a dynamism in the real economy. That isn't created by the Federal Reserve, but we can be a foundation with clear, steady policies.
I'm green on my spy call from yesterday.
Remit that you gave us, so that the American spirit and American economic growth can continue to be the envy of the world.
Something on the top of mind for myself and certainly for my constituents in Missouri's 2nd Congressional District is the state of the economy, including the cost of living, job growth, and interest rates.
Spy QQQ
Though
IWM
it is
recovering
often
as predicted.
characterized
Spy
as
QQQ
being
IWM recovering as
tasked
predicted.
with a dual mandate, the Fed, in fact, has multiple statutory mandates, including stable prices, maximum employment, moderate long-term interest rates, and financial stability. When the Fed leans into one of these goals, sir, it can create ripple effects on the others, forcing a balancing act between competing priorities. Chairman Warsh, how do you weigh these different mandates and the trade-offs between them?
So I'm a little different than some in the economics profession on that, Congressman. I do not think we have a cruel choice between stable prices and full employment. I think the mandate that you and Congress gave us are entirely consistent. If we can ensure stable prices, the American economy can thrive, businesses can hire more employees, and the dynamic economic engine we talked about can continue to be the envy of the world. I don't think we have to run a balancing test. I don't think it's an either-or proposition. We're in the business of doing what we can to ensure financial stability over a business cycle and financial cycle, and we're always in the business of ensuring stable prices
I
and full
sold
employment.
all my contracts from
At
yesterday,
different
and I bought
times,
a
our
new
focus,
contract
our
dated
lens
for
has to turn
tomorrow.
to one of those priorities, but I
I'm
think
back
they're
at
entirely
800.
consistent with each other.
I'm only down $19
Leads
for the
to
day.
my next point here. There are some who believe, Chairman Warsh, that the Fed should be used as an everything regulator, where instead of acting as an observer of markets, the Fed attempts to actively manage them beyond
The
its
account was under
statutory
$400 this
responsibility.
morning. I'm back at 800.
Chairman Warsh, how does this mission creep affect the Fed's reputation?
I
And
have an
should the Fed take
IWM call
actions
and a spy
beyond
call
those
dated for tomorrow.
specifically authorized in federal law?
We should follow the law. There is a tendency when circumstances get tough for any regulatory agency, any agency to go to the edge of their
Spy
authorities.
looks like it's going for the gap.
But that's when politics enter the door. My objective, the objective
Oil's
of my
coming down a lot.
of my
Oil's coming down
colleagues
a
is
lot,
keep
boys.
politics out. And the way we do that is we steer clear of things that we aren't authorized to do.
Thank
Gentlewoman's
you.
time has
My-
expired.
My time's expired, and I think that's the answer we're looking for. I yield back.
The chairman recognizes the
Right now, I
ranking
have
member
an
of our
Apple
Subcommittee on
call,
Digital Assets,
spy
Mr.
call,
Lynch
and
of
IWM call
Massachusetts, for
dated for
5
tomorrow.
minutes.
Thank you, Mr. Chairman. Welcome, Chairman Warsh. Good to see you. My congratulations. I was pleased to see that in your opening remarks, you spoke to the issue of artificial intelligence. And as the ranking member on AI and crypto, I was just curious to try to tease some more of your thoughts out on that. You know, not only in the financial services context, but AI in general. I mean, in the past, the Federal Reserve has been able to identify risks of impact to the financial system, but also in a wider context as well. And I wonder if you'd share some of your concerns about that. And I guess I'd like to know, under your leadership, what will be the Fed's approach on AI and how you protect the system from some of the risks that may be attendant to the adoption of AI.
Yeah, thank you, Congressman. We talked about this a bit in your office, and I appreciate the time. This is perhaps the most significant change in our economy in my adult lifetime. I take the new investments in intelligence, in some sense, to be one where we have to recognize it's a huge opportunity, but it also comes with risks and challenges. It is not the job of the central bank to provide or be certain of what the consequences are over the next 12 or 24 months. But we recognize that the United States is likely to be a big winner. The United States is at the forefront of these technologies. Both the human capital and the capital provided from investors are happening here. So the efficient frontier of these technologies are happening in the United States. This is a benefit broadly to our economy. But I don't want to sound overly complacent about it. These technologies also offer threats when they find their way into adversaries' hands. The infrastructure at the Federal Reserve, the infrastructure at our banks, large and small, they must feel new pressure as people are looking to use these technologies to do harm. So these technologies can be used for good and for harm. Over the long term, I think the U.S. is the winner. Over the long term, I think there is a material improvement in productivity, which should have a material improvement ultimately in wages and the strength of the economy. But the long term it can be quite far out, and we've got to monitor things month by month, quarter by quarter as we get there.
Yeah, the thing that troubles me is every time we talk about AI, I hear about this race, and it's us against China, or it's us against South Korea, or countries in the EU. The problem with that thinking is that in this race, and we're seeing the velocity of change is enormous. It's exceeding, obviously, our ability to regulate AI. At the end of the day, I don't see the United States as the winner. I don't see China as the winner. I see artificial superintelligence as the winner. That's where we're rushing along this course, and at the end of the day, we're creating either us, and it doesn't matter whether the creator of artificial superintelligence is a good guy or a bad guy, or a good gal or a bad gal. That superintelligence itself will be the entity that we have to confront. And I just worry about the broader impact of what's going on right now. There's tremendous resources, as you know, being poured into AI. I just hope that the course of regulation does not meet the same fate that the regulation of crypto did, where the crypto industry spent close to $250 million up here on Capitol Hill, and they got the bill they wanted. If that happens with AI, we are in serious existential trouble, not only in this country, but in this world. And I do believe that the Fed, in your position, has influence, has the ability to seek out those dangers that others may not identify. And I just ask you to please consider your role and the resources that you have, that maybe you can put a task force together to look at the broader implications of the adoption of AI. They can't even show us, they can't even explain some of the things that they're using right now. The explainability gap is enormous, but I welcome you. I wish you the best. I really do. I wish you the best for all of us.
Gentleman's time has expired.
I yield back.
Chair recognizes the gentleman from Georgia, the Vice Chairman of our Financial Institutions Subcommittee. Mr. Loudermilk, you're recognized for 5 minutes.
Thank you, Mr. Chairman, and Chairman Walsh, welcome. Thank you for being here, and Godspeed with the position you now have, and we wish you the best of luck.
Thank you.
First, I want to talk about Operation Choke Point. As you are fully aware, Operation Choke Point 2.0 involved partisan actors at the Fed using, as quote, reputation risk as a means to target and debank firms and individuals in the digital asset ecosystem. The energy industry and really anyone that partisan actors at the Fed believed unworthy of a bank account or loan. This was especially egregious given the fact that the Fed does not have a statutory authority from Congress to supervise for reputation risk. While I'm happy that reputation risk has been wiped from the Fed's guidance to examiners, can you please tell us what steps the Fed can take to durably ensure that statutory silence is never again abused by partisan actors to attempt through the Fed what they cannot make through law in Congress, and also what actions that you may be taking?
So thank you, Congressman. Reputational risk has been removed from the dashboard that supervisors and regulators will have anything to do with. My view is that being a good supervisor and regulator is tough business, and we don't need to make it harder by bringing politics into it. Vice Chair Bowman has begun a series of reforms before I arrived in this, and I think you're going to find in the coming quarters and years we're going to continue to reform and refine our regulatory system so that we can have a safer and sounder financial system, and I'll add a more competitive one too.
All right, thank you for that, and we appreciate your work in that area. The Fed currently holds a considerable share of federal debt and has for almost 2 decades now. With a ready buyer and low interest rates, it's not surprising that Congress has been incentivized to run up large and growing deficits over the same time frame. You've spoken before about the Fed's role here and the threat of monetary dominance and fiscal dominance. How can the Fed get out of the business of underwriting Congress's fiscal irresponsibility?
One thing we can do is think hard about when we're going to be buying debt from the Treasury. This might not sound like perfect virtue, but when we have a crisis like in 2008 and 2020, my view is you created the central bank to take extraordinary actions. In more normal times, in a more normal business and financial cycle, fiscal policy needs to be a decision that you make with the administration. Fed should have nothing to do with it. I've set up a task force to focus on the balance sheet, to ask the question, first, what's the effect of the balance sheet on the conduct of monetary policy and ultimately inflation? Second, what are the pros and cons of different regimes? I'm not of the mistaken view we can go back to where we were when I arrived at the Fed in 2006, but I think there are several other sustainable equilibrium we can achieve. And the third question is equally important. It took us nearly 18 years to find our way into this balance sheet. We're holding a lot of long-term Treasury debt, long-term mortgage-backed securities. We won't be able to make changes overnight. Any changes that we make would be well deliberated, would be public, would be understood, and there'd be quite a bit of time before any of that was operationalized. I look forward to the recommendations of the task force, and I look forward to hearing from my colleagues around the FOMC as we contemplate alternatives.
Well, thank you for that. And what are your greatest concerns with regard to the threat of monetary dominance?
Yeah, so you have a different job than we do. The independence that many of your colleagues have spoke about this morning is a political and economic decision to give us the pen on interest rates, to let us be the deciders of monetary policy. I've always taken that as part of a bargain. You're giving us independence in that, and my judgment is we should be staying out of fiscal policy. We shouldn't be weighing in, no matter how tempting it might be, either directly by buying assets that have some flavor of fiscal policy, or by opining on subjects that really isn't our business. We're going to try to stick in our lane at the Federal Reserve. We've been good at that for the last 6 weeks, but there's always a temptation to wander in other areas. I'm going to try to be reserved in my comments on fiscal policy with you and your colleagues. That's your job, it's not mine.
Well, thank you for those answers. They're very thorough and very refreshing to hear. And with that, Mr. Chairman, I yield back.
Gentleman yields back. Chair recognizes the gentleman from Houston, Texas, Mr. Green, who is a ranking member of our subcommittee on oversight and investigations. Mr. Green.
Over here, Mr. Chairman.
Thank you.
Thank you, Mr. Chairman. I thank the ranking member as well. And I welcome you to the committee, Mr. Chairman, but I would also say to you that I will pray for you. And I'll pray for you because many of the questions that have been predicated today hinge upon a belief that you will sanction the president's desires. It is thought among the general public that you're in the position you're in because the president could not have the influence that he wanted to have with the prior chair, and he believes he can have it with you. So I hope that you will stand firm and honor your commitments that you're making, though some of them are not firm commitments as I understood your language. You indicated that you're interested in war. I appreciate this, but I believe you should also be interested in speculative bubbles. My assumption is that you are. Are you interested in bubbles, speculative bubbles, Mr. Chairman?
We've got a wide lens. We spend a lot of time thinking about what's happening.
I'm going to take that as a yes. Now, given that you're interested in speculative bubbles, let's just talk about a bubble that occurred. President Trump's meme coin, $Trump, profited an average of $1.74 million per day over his first year. $1.74 million per day. This amounted to approximately $636 million in total royalties and licensing fees generated at its launch. While this was happening, during that same period of time, nearly 1 million investors lost a combined $3.8 billion. This is because that meme coin lost value, dropped precipitously in value. It was a bubble, by the way. It is nothing. Anybody who's listening to me, if you've invested in a meme coin, you've invested in nothing. Zero. In a righteous world, it would be illegal. But given the Secretary of the Treasury that we have currently, it is not. And that's very unfortunate. SEC, the Secretary of the SEC, it is not. I think that we should concern ourselves with these speculative bubbles. And whether you like it or not, you have to concern yourself with it because when you lower interest rates, you lower the rates such that there's more capital available for people to use for speculative reasons. So you have to be concerned about it whether you want to or not, because you don't want to see a speculative bubble. Can I have your assurance that you will be concerned about these speculative bubbles, Mr. Chairman?
So, Congressman, we want a resilient, strong, safe financial system, and we are looking at financial markets and we're looking at the real economy to make sure we deliver on what we can. Some of these other subjects are really more in your purview and responsibility than
they're in my purview. Excuse me for interrupting, but I have to. They're in my purview, but only because I choose to have them in my purview and I make an issue of them. I have to vote on them. But they're in your purview too because you decide whether the rates go up or down. And if you lower them, then people can engage in these speculative bubbles, such as the Trump meme coin, and they can lose a lot of money. Losing billions of dollars while the president makes millions on a daily basis. This is the epitome of ridiculosity. At some point, we all have to take a stand, Mr. Chairman. This is going to be your opportunity. You're going to have to take a stand at some point because this president is interested in making money. He puts money ahead of the people of this country. The people of the United States of America are secondary when it comes to the president. They may even be tertiary or quaternary, but they're not first. And at some point, you're going to have to make a tough decision as it relates to this president. Look, I'm not going to prejudge you. I'm going to assume that given your statements and the latitude that the Supreme Court has given you, that you'll make the right decision. But you're going to have to be concerned about a speculative bubble, especially as it relates to crypto. This is
All right,
something that
guys.
we'll all have to address. I thank you very much.
Gentleman goes back.
AMC has
Chair
officially
recognizes the Vice Chairman of our full committee, Mr. Heisiger
hit
of Michigan.
$2.
Thank you, Mr. Chairman, and Chairman Warsh,
Can you believe it?
congratulations.
The AMC
joining
haters are
many of
even
my
coming out.
colleagues
W. Prout, or whatever his name is.
Seeing you there as a very positive
7% gains. He's short
in late
AMC, so he's getting
2021
toasted right
and
now.
2022,
AMC is
has
going
been
up
referenced by
as
a few
predicted,
others,
guys.
The Fed had recognized inflation was not
AMC is going up as predicted. Told you 20 moving average curling up, falling wedge breakout. Gap filled to the upside. If AMC stays above $2, next major target is 205 and 210. If we break and hold 210 to 215, gap fill. And $2 calls might be going in the money. Well, $2 calls might be in the money now. They're going to start hedging. And we're going to pump if we stay above $2. AMC will pump. It will pump back like before. Like this. Pump if we stay above $2. This is terrible. Get back to stocks, man. Trump is the man. You guys can like Trump if you want, bro, but he lost me after he made a meme coin and started another endless war in Iran when he said he wasn't going to start no wars. If a man lies to me and tells me he's going to do something or not do something and then goes around and does it, guess what? I can't trust that man because a man's word is everything. It's everything. So if a man says he's not going to start a war and then he starts a war, I can no longer trust you. That's just how it is, brother. You guys could do whatever you want. I don't mind. But SPY and QQQ are recovering exactly as predicted. AMC is also popping off as predicted.
Various discussions among us, fewer pronouncements.
So
Exactly.
I
That's why you
appreciate
can't
don't
trust
wanna
any
relitigate
politician.
the past, but
I never said I was for any politician. Do not trust the politicians. What does the Bible say? Do not confide in earthly governments. Do not trust politicians. It's two sides of the same exact coin. Two sides of the same coin. All the money's going in NVIDIA right now. That's why Apple won't go up. All the money's going into NVIDIA. NVIDIA's taking the market higher. QQQ looks strong. Just hit 722, guys. Anytime you see a pump like this pre-market, the market normally goes back to those highs. Normally, it's not every time. I have a call dated for tomorrow, and I have all my calls. I like Trump because I'm tired of CS presidents. Trump's a proud American. All right, I'm tired of people that are scared to say stuff too.
TA for
And that's why
IWM
Trump
Plaza
won a lot of people over,
296
because
today.
he says what he thinks, but he's not America
TA
first
for
because he
IWM
wouldn't
Plaza
have supported
296
a
today.
war in Iran. Here's your TA for IWM, bro. Thank you for double two pieces, or I don't know. It's showing two pieces. Danny Lamb, I think that's our first super chat of the day. Danny Lamb, thank you so much for the first super chat of the day. Guys, please hit the like button if you don't mind. IWM is the weakest, QQQ is the strongest, SPY is the second. But all of them should go up. IWM just broke the downtrend. It's above the 20 moving average. All of them should go up. But QQQ is certainly the strongest. Guys, we need followers on Twitch bad. So if you have Amazon Prime, please, please. Yes, I'm e-begging. Go Prime sub on Twitch. It's literally free. All you have to do is click subscribe and then click use Prime sub. It's free and it supports the channel. We only have 16 subs, y'all. We need it. I sold one of my calls for a loss, but then I bought another one and sold it up here. I almost sold on this pop for $100. And then I sold my call from yesterday for profit. I had bought a call yesterday, a 753. I don't know how I sold it for profit, but I did. And I bought a 750 yesterday. I sold that. And I bought a 0 day today. The account's back at like 700. It was under 400. It was crazy. I was so sad. Big swings, big swings. We're still down $100 on the day. We were down like $400 on the day. The account's at 700. We need Apple, IWM, and SPY to go up. I think SPY's going to pull back. I should have waited to get my call dated for tomorrow. I kind of FOMO'd in, but that's okay. We have an IWM dated for tomorrow, SPY dated for tomorrow, and an Apple, which is the one I'm worried about most. See, this was the move I was looking for. I FOMO'd in, bro. I should have sold yesterday for profit. I had $50 profit yesterday, bro. We have to get back above 315 to be bullish.
We are. And the oldest and strongest of the human emotions is fear. It's almost the first thing we
I think it can
we
be
have.
okay, but this looks
Even
a
babies
little
will jump
sketchy.
because there's a fear of falling. Even they may not even
We definitely
realize they're
want to
in
see
the
it get
world,
back
but
above
there's this fear.
315.
And I'm not sure what to
This
call
could
this,
be a
maybe
bear
AI
flag.
anxiety, but I clearly have it.
So I might be cooked on Apple. I might be cooked on Apple.
My youngest son is an actor.
I had $10 profit at close.
It would be
I should
inappropriate for me
have
to tell everybody here to watch Sweet Magnolias.
Here, I should have
on
took that's a lesson on
Netflix.
being greedy.
However,
Right here on the falling wedge. That's what I wanted to play
concerned,
too. I don't even know
you know,
why I
he's
didn't
concerned,
take profits.
as
All I wanted to
many
do was play
people
the falling
in that
wedge.
business,
I
about
wasn't
what
thinking
AI
clearly because
can
I was
do to
down
that
so
whole,
much.
Profession. But
And now this is costing me a lot.
there's this fear that at one
I am down
at some point that
150 on
AI may
Apple
become
right
more
now.
intelligent than human beings, and then put us in a situation.
And it's
in a
taking the
situation
account under 7.
where we become obsolete.
We might have to
Do
let this
you
jump
have,
go,
as the chair
bro.
of the Federal Reserve,
I think
concerns
Appy
about
can hold
AI
me. Let's just not be
that you wish
emotional and
we
just
knew and would address?
ride it out. We'll ride the dragon. That's what we
Thank
do,
you,
baby. We
Congressman.
ride the dragon.
This is
Okay,
the
this is a little
most
disturbing. We have the bands
exciting
getting tight.
opportunity
Hold on. Hopefully I pop on this alligator and it's showing us bullish. So slow. All right. Okay, we are bullish on the 10, the 15. Okay, I'm gonna be right, bro. We're going back to 755. Just need time. As long as oil comes down too, which it is. It might not come down that much though. That dude said AI anxiety. Yo! Okay, that's what I'm talking about. That's what I'm talking about, bro. You are the man. BC Mike, bro. Yeah, boy! I want to go in heavy, but I don't want to get over leveraged again. I need to save capital. Cuz SPY might do this right now. Unfortunately. I should have waited for a pullback to get my entry for tomorrow. I knew I wanted a call dated for tomorrow, but I should have waited. I should have waited until we got the pullback. I FOMO'd in. I should have waited till we got the pullback to get my entry. I could still get one entry if we pull back, but then I'm going to be highly leveraged again, which could be big risk or like big losses or big win. Yeah, guys, if you have Amazon Prime, you can Prime sub on Twitch for free, and that helps me out. So BC Mike just subscribed to my Twitch. Thank you so much, bro. You're a legend, dude. Because we are low on subscribers. We have 9 people on Twitch right now. We have 17 subscribers. Okay, so SPY's going to pull back. I should have waited for this pullback to go in on my call dated for tomorrow. I FOMO'd in. So we're going to pay for that. We're going to pay for that. I learned from my mistakes, but I got to stop FOMOing in, dude. I FOMO in too much, bro. I should have patiently waited. I should have exited all my positions. And instead of rushing into a position again, I should have patiently waited for another entry. Dude, you got to relax a little bit. So with that in mind, we're going to patiently wait for our next entry. Yeah, you got to relax a little bit, buddy. You just sold both of your calls for profit. Why the fuck are you buying another call? You're selling for profit. That means you think it's going to top out, and it did. Why the fuck are you buying another call? Yes, your plan was to get a call dated for tomorrow. Wait for the pullback, bro. Wait for the pullback. Dude, rookie mistakes like that is going to... Keep holding you back, bro. Look at the double top. What were you doing, buddy? You just sold off a double top. You could have looked like a genius. Instead, you bought a call. You bought another call. You could have looked like a genius. We just took profit on all of those calls that we had. Well, we did sell one for a loss down here, but we re-entered a 0 day and it ran it up. And we had the call from yesterday and ran it up.
From anyone at that point. And so the question that I have, that when you and the FOMC are operating those lines, particularly in times of crisis, do you see yourself as an agent of the president or as an independent actor?
Thank you, Congressman. I appreciate the question. The swap lines that we put in place in the 2008 financial crisis, like you, I think, played a remarkable benefit in trying to mitigate the risks for the U.S. economy. And it reinforced that the dollar is the dominant currency in the world. Now, my judgment as central bank chief is to let the dollar policy be discussed by the Treasury Secretary and leave that to him. But historically speaking, I think the swap lines played a major role. The dollar liquidity swap lines that the Fed has put in place are about the conduct of monetary policy. So those are in.
All right, so bro is breaking down the dollar's liquidity and trying to keep the dollar's hegemony at the top of the food chain, ladies and gentlemen. Make sure you guys hit that like button, subscribe.
Fed's the big dog in swap lines. I mean, the ESF
That's the big dog.
It's somewhere a little bit north of 20 billion, I think, is the most that they could deploy, which they did, much, I have to say, not to the benefit of U.S. farmers that I represent, but anyway, he just
Guys,
had
the
to
Fed
bail out
is
his
the
friend in
big dog when
Argentina.
it comes to
But
swaps.
That was the Treasury, and that was different. So the question is, what happens if there is a crisis and you get a call from the president and says, I got this friend that I want you to bail out or punish by politically allocating those swap lines? Is there an independence there that we have to protect as well?
So the independence in the conduct of monetary policy and everything that comes along with it is independent. But just to go back to the 2008 financial crisis, when all that happened, as you'll recall, the Treasury Secretary and the Fed Chairman, they often had to work in tandem. Man. It's hard to distinguish in crisis times, separate from more benign times, exactly where those roles and responsibilities are. And when we put in those swap lines, when I was a governor at the Federal Reserve, I remember frequent discussions between the Treasury and the Federal Reserve. We have our independent authority, but I don't want to leave you with the impression that in 2008 or 9 we did that without a discussion with the Treasury.
Okay, well, I just, be very careful of that because you are going to be coming under extreme pressure. Now, let's say I applaud all of your focus on data, which we talked about when we talked.
All right, guys, so he is warned to be careful because he's going to be coming under fire if he doesn't handle things right.
Very valid point. I applaud you for having your committees investigate that. But does this interest also go into real-time regulatory information as well, which I think is really going to be crucial in a world where there's 24/7 banking operations? Banks and financial institutions can get in trouble fast. And so are you also going to be looking at the need and benefit for regulatory data?
So that's
on a
one
faster
reason why
timescale?
they don't.
Absolutely. I've only been here for 7 weeks. The focus in those first 7 weeks, I must admit, is making sure that monetary policy gets back on track. But many of these lessons learned, like in data, how do we make real-time decisions isn't just as monetary policymakers, it's as supervisors and regulators. The world, as the discussion
SPY's
about
gonna be
AI
coming down.
suggested, the world's moving fast.
Gentleman's time
The
has
world's
expired.
accelerating, and the Fed has to move with that speed.
Thank you. Yield back.
Thank you.
The
Chair
Fed
recognizes
has to
the chairman
keep
of
up,
ours.
ladies and gentlemen. The world is changing, and the Fed has to keep up. All right, never mind.
Subcommittee on National Security, Mr. Davidson from Ohio for 5 minutes.
Thank you, Chairman Hill. Chairman Warsh, thank you for your testimony today and frankly for leading at the Federal Reserve. The Constitution gives Congress the responsibility for monetary policy, and since 1913, that's fallen to the Federal Reserve. And, a lot of people say, well, what did we create when we created the Federal Reserve? And the fight over the shape of
See,
our
you should've
monetary
bought my call
policies
here,
is
bro.
always, Alexander Hamilton versus Andrew Jackson. So I think a lot of my constituents wonder, what happened to the purchasing power of their dollar? So could you share with us what you consider to be the definition of sound money, and what's the state of that today?
The discussion we had in your office was a lot of economic history about the first and central bank of the United States. I'm gratified that this is our third central bank of the United
getting
States.
pressed
and it's
about the
more than
buying
100
power of the
years old,
dollar.
And hopefully we've learned some lessons. One of those lessons is ensuring that we are as focused, at least as focused on the real economy as we are the financial assets and what's happening on Wall Street. This committee had long committed to a 2% inflation target.
Which they won't
That
get.
is our resolution. That's what I'm here to say and double down on. But as we discussed privately, I'll say publicly, my broader definition of price stability is a change in prices such that households and businesses don't have to worry about it.
All right, so Kevin Walsh just got pressed on the buying power of the dollar and inflation, ladies and gentlemen, as inflation eats away at our buying power.
To be such that no one's talking about it. That was a definition from the Volcker era, and I dare say the Greenspan era. It should suggest to you,
If IWM
as I
starts
sit
pushing
here
up, that's going to be
today,
bullet
this
for
Fed
Amy.
will deliver price stability consistent with what we have been saying for several years, which is inflation shall be delivered at a level of 2%. That broader price stability objective is still one in the back of my mind, and we'll see whether there's further reforms to be had.
Yeah, thanks for clarifying, because
Kevin
if you
Walsh
measure
staying
it by what
committed
people are
to
talking
2%
about, they
inflation.
know that the affordability isn't there, they know the purchasing power isn't there, and whether you put it in number like 2% or whatever, you look at, for the long run, it's been significantly higher than 2%. But it seems like one of the biggest roles of the Fed is to prevent deflation. And if you're going to have a number where the mean is 2%, and you've got a long
Discussions
period of time
between the
where you've
Treasury
had
and
it
the Federal
well above
Reserve,
2%,
we have
you
our
have to have some
independent
significant
authority.
periods of time where
I
it
don't
would be
wanna
below
leave you
that.
the
But
impression
I
that in
wish you the
2008
best
or
in your
9 we did
challenges,
that
because
without it.
my constituents are counting on us to get this right. It truly is one of the most consequential things for our country. Sound money is truly essential to defending freedom. So I think the stakes are really high. One of the things that we look at is the connection to the way that the market functions. The Federal Reserve covers massive fiscal deficits, and they certainly do that when they're the purchaser of treasuries. They load up their own balance sheet. In some ways, you don't get a price signal. What's the real 10-year? What's the real 30-year? Well, when the buyer is the Federal Reserve, you don't know whether they're creating a higher rate or preventing a higher rate from happening because it distorts the market. And we also talked about in this regulatory role, there's a sort of bridge between the Federal Reserve as a regulator and a monetary policy role. So I wonder, when we think about what we created with this version of the Federal Reserve, do you consider the Federal Reserve subject to executive authority? I mean, when there are executive orders that are issued, let's say just relating to the regulatory side, not monetary. I get, some of the concerns on steering monetary policy. Presidents have always had an opinion on that. Well, if you put out a regulatory framework and the executive order relates to the regulatory structure of the Federal Reserve, is the Federal Reserve subject to executive orders?
So it's a good question. Let me say a word, if I can, in 53 seconds about that, and go back, if I can, to say something about what you were talking about in setting prices rather than taking prices. First, as you know, I'm prepared to do everything I can to ensure the independent conduct of monetary policy. You can hear from all sorts of people, but we're going to call it the best we see it. On regulatory and supervisory policy, I do think it works best when the bank regulators, who you've all given authority to, when we can work in concert. I tend to not like it when there's a regulatory arbitrage, if an institution's trying to choose between whether to be regulated by the OCC, the FDIC, or the Fed. So I'm encouraged to have a robust discussion with my colleagues at other bank regulators about what we think is the right public policy. But if we think that the right public policy is different than theirs, we'll put it out for comment and notice, perhaps even as early as Saturday.
Gentleman's time has
Thank you. My time has expired, and I yield back.
Chair recognizes the ranking member of our subcommittee on national security, Ms. Beatty, also of Ohio, for 5 minutes.
Thank you, Mr. Chairman and Ranking Member, and to you, Chairman Warsh. Thank you for being here today. And let me first start out by thanking you for reaching out to have a dialogue with me, and I look forward to making that happen. Also, I certainly appreciate your response, particularly to Congressman Meeks and Congressman Foster, on you holding firm on independence and that you would protect the data and the law. That goes a long way with me. I want to start with a question about the housing market. As you're aware, the Federal Reserve monetary policy heavily influences the United States housing market through setting of benchmark interest rates.
Hold on, did she just say bitch mark? I don't know. Maybe I misheard that, but did she just say bitch mark?
Dictate the mortgage rates and housing affordability. Many homeowners were able to access mortgages.
Shorty texting her man right now, look.
Historically low interest
She
rates during
texted
the
furiously.
pandemic. But rates have more than doubled since then, and I'm concerned about the impact this is having on first-time home buyers and minority borrowers in particular.
First-time
who
home
are
buyers
also
get screwed,
facing
baby.
high home rates and insurance policies. Homeowners are exiting pandemic-related forbearances and also are struggling to enter into affordable repayment plans due to the high interest rates.
I'm looking for
which
another
in many
entry for a
cases
call.
could push them into foreclosures. Now, I understand that the Fed can't
Amy
increase
coming back?
housing supply or prevent foreclosures directly, but I'm interested to hear your thoughts on the impact of rate hikes on the housing market, especially for those more vulnerable homebuyers. And certainly, we have a new amazing housing bill, the 21st century. I have to get that plug in, that I have 6 bills in that.
6 bills.
Now I yield to you.
Thank you, Congressman. We stay out of housing policy, and as the debate that's been had in this room suggests, you all have a lot to say about what housing policy is.
So she just made that long ass question just for him to only say, listen, the Fed don't deal with housing policy, lady. Duh.
Going to be, but I don't want to suggest that we don't touch it. We don't target housing, we don't target any particular sector, but the decisions we make have a big effect on housing. And housing plays a
spy,
huge
double
role
top.
in most households' family budgets, in their savings. So we recognize the importance of it.
Foam it into the call.
Rate hikes.
Absolutely. We, as I said in my opening statement, I think
the account at
broadly
probably under
about the
700.
conduct of policy today. I sounded quite optimistic about what was happening in manufacturing, what was happening in output. But you heard me say a somewhat more cautious note about housing. And I think that's in part because monetary policy when rates were cut to extremely low levels, provided what was thought of as a once-in-a-lifetime opportunity to get the first house. I would prefer a set of monetary policies that are not boom and bust, that don't just make one generation more fortunate about being able to afford their first home than the next. So what we can do in monetary policy is try to be clear about our objectives, deliver price stability in the context of full employment, and not react overtly to any data that happens one day or the next.
But
We
you'll
have
be
an effect
sensitive.
on long-term rates, and we take it very seriously.
And you'll be sensitive to the issues that I'm bringing up. Okay, in my last minute, let me now turn to fraud and scams, which is one of the top concerns that we've been dealing with lately in this committee and my subcommittee. As you know, payment frauds, including scams, often involve multiple institution and payment methods,
we need to
and
make
no
a-
single
make a move
agency
here.
or entity can solve it alone. What specific role
We're at
do you
6:50,
believe the
boys.
Fed Reserve
We need to
should
make a move.
play in helping build a more coordinated cross-sector approach to frauds and scams?
Yeah, so it's another fair one. The Financial Stability Oversight Council, which the Fed is a key member of, fraud is on that agenda. That committee is run by the Treasury Secretary under the
Frauds
law.
and scams,
But the
ask
Fed
the
has equities
Somalians.
there, and the Fed needs to ensure that, especially with this new generation of technologies, that the American people don't lose confidence in our payment system, don't lose confidence in the banking sector that we regulate. So we do have an important role to play there as well.
I'm gonna interrupt only because I have a few seconds later. I'm glad you mentioned this new generation. I've received feedback that better information sharing between financial institutions and online platforms is key. Do you agree?
Absolutely. Real-time information between lender and borrower is a
Duh.
way to make credit more available to more hardworking Americans.
Thank you.
She just asked the dumbest question ever, ladies and gentlemen.
And I
Of
yield back.
course, better data
Gentlewoman yields back.
and quicker
Chair
data
recognizes the gentleman
gonna
from
be better for
Tennessee,
everyone.
Mr. Rose. You're recognized for 5 minutes.
Thank you, Chairman Hill, and thanks to Ranking Member Waters for holding the important hearing, and Chair
I should have
Waters,
bought a put.
thank
I knew it
you
was gonna
for
pull
being
back.
here
I
with
gotta
us
stop
today. Chairman
hesitating
Walsh,
on the puts.
prices for agricultural inputs have, after experiencing a spike during the Biden inflation that began in 2021, have remained stubbornly high. Needless to say, families are also in my district were themselves hit by the rise in food prices that began under Biden and your predecessor in 2021.
Damn, we're about to go
And
back
grocery
under
prices
500, bro.
remain
What the
persistently
fuck?
high. This strains household budgets and makes it harder for people in my district to put food on the table while also paying for all of life's other necessities that are also more expensive following that inflationary period. We saw in the 1980s how hard it is to deal with persistent inflated prices and the difficult decisions it can place on the Fed to get and keep them under control. Can you please tell us what is the Fed doing and what do you intend to do to ensure that a resurgence of inflation does not materialize?
So that's job number one. We cannot, I don't want to overstate, we cannot have a direct, immediate effect on short-term particular prices at the grocery store or in agricultural goods. But the job you gave us and the job we are resolute about accomplishing is to make sure that any short-term changes in particular prices don't broaden out, don't change to a generalized change in the price level. Unfortunately, that's what's happened for the last 63 months, and those days have to be a thing of the past. I'll make one other note. Good economics, going back a couple of generations, talks about sticky prices. And the longer that prices have been above the inflation target, it's usually a bit harder to dislodge them and get them lower.
I'll tell you
Our
what, if
job,
Netflix
my
does have
commitment to
earnings
you is to take
coming up,
sticky
it's gonna
prices and to
boom.
unstick them.
Thank you. I agree wholeheartedly with that sentiment, so I thank you for your perspective. The Fed made some interesting judgment calls during the last administration when it came to its supervision and regulation decisions. Whether it was the war on digital assets, the crusade to make the Fed a climate regulator, or the use of reputation risk to debank disfavored firms and individuals, the Fed allowed itself to become the instrument of partisan actors pursuing goals beyond the powers that Congress has authorized. The Fed needs to stay in the lane that Congress has handed it and not veer off course whenever political winds shift. When the Fed does the latter, it undermines its standing in the eyes of Congress and the American people. Chairman, will you commit to getting the Fed back to truly sticking
I
to
think
its lane? And
Intel.
if so, how do you plan to do it?
So I can make that very commitment. Our credibility in monetary policy, our credibility as supervisors, our credibility
I
in
think this
payments,
is a
these are all
go.
tied together. And the way we erode that credibility are two things. We wander outside of our lane into your lane or into the lane of another executive branch, or we don't deliver on our promises. The first thing we can do is to deliver on our promises.
Intel might be a go. Especially if it can stay above this 106.50. It's been in an overall downtrend. It's ending that downtrend. Yes, buy dump. Should have waited to buy the call, bro. You stupid. Probably stick with SPY and go in one more call. SPY call. Let's see how much they're dated for tomorrow. That's a double top. That's a double top. This market is shaky. All the way back down to 750 on SPY. I want to see how it reacts off of this level. It might be time to enter. Dude, something's going on with my thing. Like, it's making weird movements. I kind of want to get more AMC calls dated for further out. I think Intel is gonna go up though. If it can hold this 106.58. Also gap fills to the upside. Meta pulling back a little bit. And then Nvidia looks like it's gonna come down a little bit. What if Apple just rips to the gap fill? If Apple rips to the gap fill, I'll go in the money and profit. I think the gap fill could come, but maybe tomorrow or heading in the close. We're defending this 313 level hard. GameStop made a nice high today, man. 2240. 2240. Let's give it up for GameStop.
They did the best they could, and I hope you do too. I know you're an honorable person. Good luck, sir.
Gentleman yields back. Chair recognizes the Chair of the House Small Business Committee, Mr. Williams of Texas, for 5 minutes.
Thank you, Mr. Chairman, and also, Chairman, congratulations to you. America's banking system is the engine of prosperity in this country, and it plays a critical role in creating opportunities. From the community banks that serve small towns and Main Street businesses to the larger institutions that support our capital markets, access to credit is essential for families, entrepreneurs, and job creators. And as a businessman who has owned and operated a small business for 57 years, I know firsthand how important it is to have a banking system that is both safe and accessible. And the American public and the American people expect a chance to pursue their American dream, and access to affordable credit is often what makes that possible. So under the Biden administration, we saw proposed regulations that threaten that dream by making credit more expensive and harder to obtain. So my question would be, can you tell us how you think the Federal Reserve's supervisory role can promote a safe and sound banking system while ensuring businesses and families continue to have access to the credit they need to pursue the American dream?
It's a great question, Congressman. I'd say two broad things. One is we need a highly competitive, diversified banking system. This is the secret, one of the unheralded secrets of the U.S. economy. Our banking system is larger. The number of institutions of various sizes serve different constituencies. I think part of the reason why the U.S. has grown faster than our G7 and G20 colleagues is because the banking system here is fundamental.
All right, so Kevin just revealed America's secret on why we are growing the fastest, ladies and gentlemen.
Different. Secondly, what I would say about how we do that is we need to have tailored regulation that befits the kind of institution and the customers that they're treating.
750 bounce.
One size does not fit all. And finally, I'd say I am all for international coordination of banking standards. It is a useful effort so that we meet in Basel to try to come to some international standards. But the Basel endgame is not America's endgame. That is not the Federal Reserve's endgame. Our endgame is ensuring that we have the right rules that befits our economy so that we have a safe, sound, and competitive banking system. And anything we agree on with international counterparts have to be in service of the American economy.
Thank you. And as businesses depend on clear, consistent rules. When Congress passes a law, it reflects the will of the American people. And agencies like the Federal Reserve have a responsibility to faithfully carry out those laws, and regulatory certainty gives businesses like mine the confidence to invest, hire, and grow. So question would be, can you tell us how you intend to guide the Federal Reserve, and will you commit to ensuring the Fed carries out the laws of Congress that Congress passes without expanding beyond its statutory authority?
Yeah, I can make that commitment to you, Congressman, because that's how we keep politics out. That's how we stay independent in the conduct of monetary policy. The Federal Reserve is not a repair shop for broken statutes, or we aren't empowered to go wander into areas outside of our remit. We've got a big and important job, I understand it, but it's bounded, and we have to stay inside of those bounds.
My last
All
question.
right, so Kevin just explains the boundaries and the limits of the Fed.
Real quick, Chairman. One lesson I've learned in business is that your word matters, and when you make a commitment,
Your word
people
does
expect you
matter.
to follow through, and consumers' trust is earned by doing what they say you are going to do. So the Federal
Word
Open
matters.
Market Committee has made a commitment to the American people to restore price stability. Families and small businesses across the country are trying to plan for the future, and they are coming and they're counting on the Federal Reserve to deliver. So, Mr. Chairman, in the short time we have, what is your strategy for restoring price stability? And what confidence can you give the American people that the Federal Reserve will achieve its price stability target?
So I can give you the commitment that we will deliver price stability. I was comforted at my very first meeting about a month ago. As I looked around the table of my 18 colleagues, there was no willingness to tolerate higher prices. There was a commitment that was unambiguous and unanimous that we're going to deliver. So the next question is, how are we going to deliver it? First is, I would say, make it very clear to you and the American people and to U.S. businesses
Yeah, if Amy
that is
votes
not a
two, this
commitment
is
we're going to
huge.
walk away from, and we're not finding acceptable the higher inflation
stops
that
back at
has
22.40,
endured in this
dude.
country for more than 5 years. The second
The
thing
memes
that we're
are
going to do
priming.
is take responsibility.
We
As I
talked
mentioned to
about
one of
this
your
in my
colleagues
video, guys.
before, in our view, in my view, there is no anguish
The
in
memes are
central
primed.
banking. This isn't saying, oh, I wish this or that were to happen. You gave us a lot of the tools to deliver on that commitment. We intend to do it. And the third and final thing I'll say is we have the tools to do it. We have a printing press. We have a balance sheet and interest rates. They have both provided significant accommodation and restrictiveness during
Memes
different
are
parts of the
prime,
business
dude.
cycle. And over the coming period, I'm going to ask our colleagues and have a good family
AMC
fight
and GME to pump
about,
this week.
the extent and timing in which we would need to deploy those
Gentleman's
to
time
deliver
has
on the
expired.
promise.
Appreciate your leadership. I yield back.
Chair recognizes the gentleman from New Jersey,
AMC
Mr.
is now
Gallagher. You
green on
recognize
the
for
week
5.
as
Thank you,
predicted.
Mr. Chairman. Chairman Walsh, congratulations again, and thank you for your service to our country.
AMC is green.
You
5%
stated that
on
the use of AI technologies is, quote, a paradigm
is green
shift, and that the
3
United
and a
States
qu-
would be, quote, a
3.30%
big
on the
winner
week.
in the medium term.
AMC
How has
is
the
up
use of
5 to 6%
AI
today.
impacted your view and the future of the global economy, and how is the Fed reacting? How should it react, and especially vis-a-vis China?
750
and our other
bounce is mega
competitors?
bullish, guys.
So I don't view the U.S. economy as in a zero-sum game. I don't think that weakness abroad is good for the U.S. But what I do mean to say is if there was one thing that is the biggest driver of American prosperity, it's productivity. Productivity gives companies the ability to invest in new capital. Workers then have that new capital and can deliver and ultimately have higher real take-home wages. This is a supply shock in the United States. I have to admit it's happening faster than I would have projected 18 months or 2 years ago. We're seeing this technology and the capability of these models grow at exponential rates. Something like a hyper Moore's law is happening. I don't want to suggest that we know exactly how this is going to shake out, but the U.S. is best positioned to be a winner. But again, as I may have mentioned earlier, you gave us a job to deliver stable prices and full employment. What are the consequences? What are the implications of this positive technology shock to that? I've taken 3 experts, I've asked them to deliver their views to us over the coming 3 to 6 months. And then internally at the Fed, we're going to do a lot of work. I'm confident that at the end of the day, the U.S. is a winner, but it's not going to be a linear path, and I'm open-minded to challenges both to the full employment and price stability part of our mandate.
Right, because as part of that, I assume the workforce employment is going to be, what should our goals be? Should they shift? I assume those are the kind of questions you all are debating.
Yeah, we're debating just those questions, Congressman.
New
And
intraday high
if I
for
were to look
GameStop,
over the last few
22.41.
months, it looks to me as though this technology hasn't displaced workers at this point. It's made them a bit more productive. And I say a bit because I think the productivity is in front of us. But a year or 2 from now, will these intelligence tokens be adding to the workforce or causing the workforce to temporarily be disrupted? That's something that we're very focused on as we think about what the economy looks like 12 and 18 months from now.
Thank you. We're seeing an unprecedented number of children using apps on their phones like prediction markets or sports books to gamble. Research is showing especially young people are very active in the past year. 11 to 17 have gambled in the last year, 36% of them. What is your view regarding possible insider trading on these markets? Are you thinking about that? Do you think we should be doing more to protect our children on these betting apps? Have you thought about that at all?
Well, I've thought about in two respects. First, when I was sort of a junior in junior high school and high school, I was the nerdiest kid probably in this room, so I wasn't wandering into those.
That's saying a lot. You should meet the chairman. Yeah.
But generally, the questions about the use of kids and smartphones and whether insider trading is happening and the rest, that is almost entirely outside of the Fed's jurisdiction.
All right.
So I'll defer to.
So Kevin just got asked about insider trading on gambling apps and, of course, kids using these gambling apps, which is becoming a huge epidemic here in America. So many people are gambling, and a lot of kids are too. It's being pushed to them. It's insane.
Other people around, both in the Congress and the executive branch, to take those on. I don't really have much more for you.
Let's pivot to something else.
Hopefully we hold 750 here on SPY. That would be extremely bullish.
Deposit insurance remains an important priority for me. We'll help ensure that small businesses remain stable and mainstream is able to thrive. What are your thoughts on mandated federal deposit insurance standards across the board for all banks? Should there be specific asset thresholds, a tiered system?
Want to see IWM back above 295. It's been kind of just flat.
So we're going to follow the law, and we're not going to weigh in on what we think the right deposit insurance caps are. But I don't want to walk away from the question entirely. The FDIC insurance caps should be binding. That is, we need to have a supervisory and regulatory system such that if a few banks get in trouble, either myself or the Treasury Secretary don't have to, in unusual and exigent circumstances, provide backstops for everybody, including depositors. So the way I think about it is deposit insurance reform and proper deposit caps should be of a piece with strong reform-oriented supervision and regulation. So the law that you decide should be the right caps for individual deposits. That should be the case both in good times and bad.
Last question. Do you think that people in my district, young people, keep coming up to me and say they're not going to be able to afford a home, to be able to get a mortgage? Do you feel confident in your tenure people are going to still be able to afford to get a mortgage?
Nah.
I'm a great believer in the American dream, and I know that a mortgage and first-time house is one important step to do that, and we'll do what we can to support it.
Thank you.
Then lower the rate to 0, bro.
Thank you, Congressman.
Just let it
Gentleman
go.
yields back. The chair also wants to, as I call on the gentleman from South Carolina, just offer condolences to the gentleman from South Carolina and all the people of South Carolina on the loss of Senator Grant. And with that, the chair recognizes the gentleman from South Carolina, Mr. Timmons, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Warsh, for appearing before the committee today. The Federal Reserve has an important responsibility to carry out the mission Congress assigned to it. Maintaining
we
public
might see some
confidence
downside.
depends
The
not
bands
only
are
on sound
expanding.
economic policy, but also on staying within the statutory mandate. In recent years, many Americans question whether the Federal Reserve moved beyond that mission
Bulls
through
trying to
actions
defend
involving
750.
climate-related financial regulation, digital assets, and reputational risk. I appreciate the steps that have been taken to refocus the institution on its core responsibilities. Looking ahead, it is important to ensure the Federal Reserve remains focused on the responsibilities Congress has given it. Chairman Warsh, what steps will you take to ensure that the Federal Reserve remains faithful to its statutory mandate and develops institutional guardrails that prevent future departures into area beyond the authority Congress has delegated?
So this is no time to wander, Congressman. The job you gave us that's clearly in the four walls of our authority in monetary policy and payments and supervision and regulation, we're early in a reform agenda. All of our assets, all of our resources, the remarkable talent of my colleagues need to be focused there.
It did break the trend line,
Good intentions are not
but
enough, and it is not the culture of the Fed or the
We're
best
curling
of
up
the
a little
Fed's
bit on the floor.
traditions
I
to
think it should
wander
be
into
okay.
areas that are not our responsibility.
Getting embarrassed
When
on the
we
daily,
do,
though.
we
Gotta be
sacrifice
careful.
the credibility we need to accomplish our core tasks.
Thank you for that. More broadly, the issue of mission creep has challenged many federal agencies over time, and the Federal Reserve has not been immune. Following the financial crisis of 2008, the Federal Reserve assumed an increasingly expansive role through extraordinary monetary interventions. More recently, the institution became involved in matters such as climate-related financial supervision, digital asset regulation, and the application of reputational risk in bank supervision, leading many to question whether these activities extended beyond the responsibilities Congress intended the Federal Reserve to perform. Mission creep carries meaningful institutional cost. It diverts resources from core responsibilities, exposes agency actions to legal uncertainty, and risks undermining the Federal Reserve's credibility as an independent institution that derives its authority from Congress rather than from evolving policy preferences. A central bank is strongest when it exercises the authority Congress has granted with discipline and restraint. So, Chairman Warsh, as chairman, what principles will guide your efforts to ensure that the Federal Reserve remains focused on its
money's
statutory
flowing into
responsibilities
NVIDIA.
and resists
That's why Apple's coming
institutional
down.
pressures to expand beyond the role Congress has assigned?
Apple will
The
return.
most important thing at the Federal Reserve,
Hopefully soon.
as I mentioned before, is not the printing press. It's our culture. And the best of the Fed's traditions tell us what our culture should be. Accountability, responsibility.
Guys, please
and
Prime
performance.
sub on Twitch if you
By
can, man.
reiterating
If you have
that,
Amazon
by
Prime.
reminding all of our colleagues that that's what drives us. I've started to do it in my first 7 weeks, but it's resonating. I hear it back in the hallways. I hear it at the cafeteria. And so at some level, people might think of this job as getting the answer right, well to the right of the decimal point. And occasionally we do have to wander there. But in order to deliver on what you've asked us to do, I've always thought that most of this job is the left of the decimal point. We're going to get the culture right. We're going to get the strategy right. We're going to get policy right. And we're going to get the organization right. And if we can do those big things, getting the right answer to the right of the decimal point, I think will be a lot easier.
Thank you for that. I would also like to discuss inflation because maintaining price stability remains one of the Federal Reserve's most important responsibilities. American families have experienced the highest inflation in more than 4 decades. Rising prices reduce purchasing power and place real restraint on household budgets. While inflation has come down from its peak, recent data suggests that inflationary pressures remain and price stability has not yet been fully restored. The people I represent should not have to endure another sustained period of elevated inflation.
Please.
Stable prices are fundamental to long-term economic growth, household financial security, and confidence in our monetary
No
system.
more inflation, man.
Chairman
Please.
Warsh, what is your assessment of the current inflation outlook, and what policies will the Federal Reserve pursue to ensure that restoring and maintaining price stability remains its foremost monetary policy objective?
First, I agree, Congressman, with your diagnosis. For too long, American households and businesses have suffered the undue hardship
now it's going crazy.
of high inflation. This Fed will deliver price stability. This Fed has the power to do it. We have the tools to do it. What I would also say is I'm not in the business of trying to prejudge what the committee that I'm honored to lead decides. I think we need
Buy
to
the
have
dips on
continued
now.
good family fights on this subject. That'll start again in a couple of weeks. And when we have news for you about exactly the methods of solving this problem, we'll be very clear about what they are, and so will the American people, to deliver price stability.
Thank you. I yield back, Mr. Chairman.
Gentleman yields back. The chair recognizes the gentlewoman from Massachusetts. Ms. Presley, you're recognized for 5 minutes.
Thank you, Mr. Chair, and welcome, Chair Warsh. Congratulations. And
Amy's
welcome to
back
the
over
Federal
too,
Services
bruh.
Committee. I represent the Massachusetts 7th Congressional District, a beautiful, dynamic district, and also one that is deeply unequal. In fact, in a 3-mile radius from Cambridge, home to your alma mater, to Roxbury,
Yo, guys, AMC's back over $2, y'all. I'm telling you, if AMC holds 2, bro, and it looks like we're going to hold 2. It looks like we're going to hold 2. We're using the bands as support. Mega bullish, bro. We're going to go for the gap fill. I might get some more AMC calls, like a bunch. Like a couple. I might sell the contracts I have and then buy new ones. Because they expire this Friday. AMC looks really good, dude, to go for this gap. Might have to YOLO some Amy's. I gotta let go of this GameStop too. GameStop's going up a lot, and maybe if I can hold on a little bit longer, I might be able to get back to like break even, or maybe even GameStop's moving nicely. I mean, but my calls expire this Friday. I need to get calls that are dated for August on AMC. Guess we got to look in how much that's going to cost.
Look deeper into the data. Black unemployment writ large is at 6.6%. Now, the Federal Reserve
tell 'em get a
semi-annual
job.
report highlights that Black people have continued to have higher unemployment rates and lower wages than white workers. This is a
Because they work
problem.
not as good
It's
jobs.
a problem for Black workers. It's a problem for the Black family, but it's
I'm
a
just
problem
keeping
for
it real,
everyone.
bruh.
It's a problem for workers like Teresa in my district, who despite being educated, qualified, and good at her job, was let go from her public health position due to government funding cuts. And with the
It
state
wasn't
of
due because she was
HHS, our
black.
country needs
She wasn't fired because she was black. I know there's racism in America, but bro, if you play a victim, you're gonna be a victim, okay? If you think everyone's out to get you and you can't make it and you're never gonna get ahead, then you will never get ahead. And if you make excuses for yourself, be like, oh, I can't get ahead because of this color of my skin, bro. That's a lie. You're gonna hold yourself back when you don't need to.
it impacts everyone. It impacts our small businesses that spur local economies and workforces. So the point is, when Black workers lose, everyone loses. So Chair Walsh, given the
When
persistent racial
people,
disparities
bro, don't
in
make it white and
unemployment,
black. When people
will
lose,
you, as Federal
everyone
Reserve Chair,
loses. That's what
commit
you need to say.
to
When people lose,
confronting
everyone
these
loses.
workforce challenges that Black workers are forced to endure?
So Congress.
Let's not make it all about
I'll
black
say
and
this,
white.
which is the U.S. can ill afford to leave any individuals behind. The economic opportunity, which is essential for America's growth trajectory over the next 5 and 10 years, means that every American needs to have opportunities to be productive. And I believe, unlike some in the economics profession, that productivity-led economic growth is a good thing, not a bad thing.
Thank you, Mr.
And I'm
Chairman.
hopeful that the Fed, we can be supportive of opportunities for economic growth.
And I want to say specifically for Black workers, because if a problem of this magnitude,
my
there are
God.
700,000 unemployed Black women right now. If a problem of that magnitude was happening to any other group, we would do the analysis and we would have a plan. So I'm going to ask of you what I asked of your predecessor, for you to come and brief the Congressional Black Caucus on your strategies and efforts specifically to the Black worker, given the disparate impact. You know, you've talked about your refusal to tolerate a persistent high inflation. I need the same rigor, the same vigor, and the same commitment when it comes to the Black worker. It's already a part of your mandate.
So American workers, no matter their backgrounds, have my commitment to do what we can at the Federal Reserve
Doesn't
to
matter
make
if
sure they
you're
have
white
all
or
the
black.
opportunities in front of them, regardless of any
See,
characteristic.
Well, Mr. Chair, experts
I
believe
also
when you
want to
target-
point out. I also want to point out when people do stuff like this, make it all about race. Guess what you do? Guess what you do? You cause more division. It's not about white or black, bro. How about you make that a non-issue? It's so easy. It's not about white or black, bro. It's about people. You just cause more division when you're like, oh, black people this, black people that, white people this, white people that, bro. You're just causing more division. People. Stop putting color in front of it.
For all intents and purposes.
She just
the
went on a
underlying
rant, and it was like a
economy is
racist
strong.
rant.
The small businesses, community banks I speak to throughout, for the most part, throughout Pennsylvania, report steady
Something's
demand
wrong
and
with
positive
Weeble right
business
now.
outlooks. As well, the businesses are profitable. Tax revenues for the federal government are up 6.9% in 2026, which is phenomenal. In Pennsylvania, by the way, they're up 2.4% this last fiscal year. And
Hopefully
they're growing
IWM goes for
about
295. It's tracking
federal
perfectly.
Revenues are way up, which shows businesses, again, are profitable. Many of us in this committee have made the case for quite a while now that the Fed needs to review the big picture, as you've been making.
Yeah, IWM looks good.
Supply side growth and lower interest rates. are
Hopefully
not
it gets
in
a nice
conflict.
pop here.
They are, in fact, very often complementary. As lower interest rates
And
encourage more capital
SPY coming
investment,
back. AMC $2. This is huge, guys.
put downward pressure on inflation.
simply by using the well-known equation: when supply exceeds demand, prices go down. I'm glad you appreciate that very much. So, Mr. Chairman Warsh, you've created these task forces, which we're all pleased to see, I think. And will you express how these task forces will help achieve the Fed's goal of 2% inflation?
Thank you, Congressman. I'd be happy to. The 5 task forces are an attempt to go back to first principles. Ask whether the way the Fed has conducted business for more than a generation, the way we've gathered data, the way our
I just
models
bought more
make
AMC
forecasts about
contracts.
what's going to happen next, our understanding of changes in productivity and changes in the supply side. These are all big
I just
fundamental
bought more AMC
questions,
contracts.
and I think we are better equipped to make smarter decisions on policy so that we can deliver
Dated
price
for
stability
August,
and
because we're
full
going for that
employment.
gap.
If we get the benefit of some outside views. Again, we're going to then decide what to do with them. We're going to make the decisions. We're not going to outsource them.
I have 5
But
AMC
if there was
contracts.
ever a reason after a long
5.
period
I have
of
6
inflation
AMC
that was
contracts
too
right
high
now.
to go back to first principles.
I'm going to let
this is
some of
it.
them go, though.
And like you, while I reviewed the data that came out this morning on CPI, and it was
Well, fuck it, I'll just
positive
hold 'em
relative to
all.
expectations, I'm not for cherry picking.
I'll just hold them all.
I'm not going to show up here and say mission accomplished.
Got a couple more
And,
days on this
what
side.
I'd say is there's plenty of work to do, and I would feel more confident if we had better data to inform our decision-making. We have a task force that's going to be focused on doing just that.
And I know you're also going to utilize the balance sheet process as well. You've critiqued the QE planning or activities for a while. You've stated you plan to reduce the Fed's balance sheet. How do you plan to do that? What role does the private sector play?
On the balance sheet, again, I don't want to prejudge the conclusions of the task force, and I can't speak for 18 of my other colleagues. But as a first approximation, I'll say now what I've been thinking for years. In normal times, the Federal Reserve should be a price taker, not a price maker. We should be observing what is the price for a 10-year treasury between a willing buyer and willing seller. We shouldn't have our thumb generally on the scale. Now, when it comes to a crisis, I don't want to suggest that we're going to be able to sit on the sidelines. I would hope we could, but I can't say that for sure. The Fed balance sheet, both its size and duration, are worthy of a very worthwhile review. I'm inclined to think that there are better regimes we can go to, but we're not going to do it without due consultation with the markets and with members of this committee.
Great, and certainly the reserve requirements of banks and all may put this in the hands more so of the private sector, as I think you believe. Chairman Greenspan in the 90s recognized that a productivity boom from computers and the internet was putting a downward pressure on inflation, and he cut rates based on that data, ahead of the data. Does AI present that same kind of opportunity today?
If you've seen one productivity boom, you've seen one productivity boom.
Okay.
I take very seriously the productivity booms that we've had. And generally, if you look at the surge in productivity in the post-war era in the United States,
Intraday high for
we tend to
GameStop,
move from a relatively low
22.43.
productivity realm environment where productivity grows about 1.5%
What if the memes
a
just
year.
start pumping?
And then for a decade or longer,
Gentleman's
move
time has expired.
to a higher productivity realm. I think this could be that opportunity, but I can't say it for
If
certain. as of
IWM can
yet.
break and hold
Chair
295,
recognizes
it's
the
huge.
gentleman from Illinois, Mr. Caston, for 5 minutes.
Thank you, Mr. Chairman. Chair Warsh, nice to see you here. Welcome. I want to start with just a purely academic question for you, just on economic theory, but with some context. You talked to Dr. Foster about your experience in the 2008 downturn. I was not here in 2008, but I remember in 2020 when former Chair Bernanke came in as someone who had some experience steering through a crisis. I remember that we had this meeting in March of 2020.
Why is IWM not
saying,
moving?
"We've
Spies
never seen
pumping back up
unemployment spike
nasty."
this quickly since the Great Depression. We've never seen GDP collapse this quickly since the Great Depression."
I'm up
Here's someone
almost
who
$50 on the SPY call I
steered the
bought.
economy through an $800 billion bailout, which at the time seemed like a big number. I mention that, number one, because I hope you don't find yourself in the future being asked to address Congress based on your own expertise steering through through a crisis, although certainly Chair Powell got his chance there as well. But The difference in the way that we responded to COVID and the way we responded to 2008 was a much heavier fiscal stimulus, whereas the 2008 crisis was, largely QE and monetary, as big as $800 billion was. We also recovered from COVID a ton faster, not only faster than everybody expected, but faster than all of our peers. And should we find ourselves in another crisis, what do you, just as an economist, how do you think about the right shaping of fiscal and monetary policy? Obviously, you only have purview over one of those, but your voice is going to matter.
As I said in an analogy to one of your colleagues, I'll say it here. If you've seen one financial crisis, you've seen one financial crisis. So I'm careful about extrapolating. More generally, I would say the response to the 2020 pandemic had some very similar areas with respect to monetary policy. That is, the central bankers in 2020 took some of the toolkit that we innovated on in 2008 or 2009, and they provided overwhelming liquidity. That's in our remit in crisis.
Remember, PPI
not
data
in more
drops
normal
tomorrow,
times.
guys.
My judgment in 2008, judgment in 2020, and if we were to have a crisis when you and I are in these roles, I would be describing to you what the central bank can do. I would also try to describe to you the limits of our authority, such that you have the opportunity to make whatever decisions you think are right. But I'm going to make a promise to you now that I would hope to hold to then, which is the fiscal policy response is going to be the decision of you and the administration. We're going to do our very best to steer clear of that.
Well, and I appreciate that, and I think none of us want to go there again, but we also want to make sure that, monetary policy can target some sectors of our economy, not the others. We need to work together. On a similar subject, I want to pivot, and I was spinning through, and I love these reports all the time. Send them it's always good reading. I want to talk specifically about Figure 1 and Figure 43. Figure 1 shows U.S. CPI over the last decade or so. Figure 43 shows global CPI trends. And what's very clear is that U.S. inflation picks up immediately after Liberation Day on account of the tariffs. Global inflation picks up after the Iran war. You can see the spike. So, we had inflation generally coming down after 2020, starts picking up on account of tariff policy, and then starts picking up again on account of foreign policy in the United States. And you can just see in those charts what was domestic and what was international. How effective is monetary policy when it's fighting with fiscal policy or foreign policy or economic policy? Because I don't really understand the theory of the case that interest rates undo tariffs, or that interest rates undo high oil prices, or for that matter, QE or the other things. So, how concerned should we be about monetary policy?
So I put information for inflation in the day trade chat.
So generally, Congressman, I'd say a couple
And it was
things.
right.
First,
I'm putting information for PPI.
We are takers of the fiscal policy decisions that you and your colleagues make. We will take that into account. I'm not suggesting that we act in isolation.
It was right about
To be clear,
inflation.
we didn't vote on tariffs or the Iran war.
But the policies that are made of the executive branch and of Congress, we're aware of them. We have a wide lens, but we then take those on board and make whatever decisions we best can consistent with our remit.
Do you have the tools to counter them?
We have tools that are powerful. Whether they're working at cross purposes or consistent with them is never easy to know in real time. But let me make one other important distinction. Military conflicts overseas, changes in trade policy, changes in immigration policy, those have an effect and we can take them into account. Often they have an effect on prices in the short term.
Time has expired.
Our business is whether those prices in the short term end up spreading out, and that's our responsibility.
I'm out of time, but let's stay coordinated would be my request.
Chair recognizes the gentlewoman from California, Ms. Kim, who also chairs
I'm
our
up
Asia-Pacific
$40.
Subcommittee on House Foreign Affairs.
My
You're
spot call.
recognized for
See,
5
that's why I got to start waiting,
Thank
bro.
you, Chairman and Ranking
for the
Member,
entry,
for hosting
dude.
today's hearing. And
I could have bought 2 of
Chairman
those and been
Morris,
up 80.
Welcome. This, I understand, is your first appearance before our committee since your
FOMO'd in, but I think both of them I'll be able to profit from. But
earlier this year, you may have heard I introduced Payments Access and Consumer Efficiency Act, PACE Act, with my Democratic colleague Sam Liccardo, because I kept hearing from my constituents in Orange, Riverside, and San Bernardino counties about how important these payment modernization is in helping small businesses owners make payroll and make sure that their workers get their paychecks on time. And
Well, we let
President Trump
79-33.
understands that, which is why he issued the executive order earlier and signed that to call for a financial system that is more innovative and is affordable for American families and businesses. So Chairman Morse, I understand you share that goals and vision for the Federal Reserve as well. But currently the situation is the payments company holding money transmitter licenses in all US states and complying with every Bank Secrecy Act rule and holding customer funds in a one-to-one liquid reserve still has no legal pathways to access the Federal Reserve payments rail directly. So as a result, small businesses and consumers bear the burden of increased costs and slower payments. So the PACE Act is trying to address that by creating OCC supervised activity-based registration for sophisticated payment companies that trade federal safeguards, BSA compliance, and capital reserves for direct access to FedNow, FedWire, FedACH. So, Chairman, can you talk about how you plan to work with the OCC and Congress to ensure that well-regulated payment companies have access to the infrastructure they need to lower costs for American consumers?
So thank you, Representative. I look forward to working with you on any details of your legislation without picking sides. What I would say is the payment system that the Federal Reserve
SPY is really gaining some momentum here, guys.
Needs to be resilient, needs to not play favorites, needs to be able to withstand shocks.
Just
and
use the
needs to
20
be
moving average on the 15-minute time frame as
and
support.
accessible so that we can do our part to ensure that the payment rails in the United States are strong. I would make a distinction between that and any payments that
she's going to come back up by Wednesday.
This is a business that
like I said, by
needs
Wednesday,
to and
full
should stay
recovery.
out of a competitive.
By Wednesday, full recovery, dude. I told you guys. By Wednesday, full recovery, bro. I'm holding my calls. I'm up 50 though. I should probably cash that in. I can't go in and out though because I'm getting good faith warnings. I'm already 500 unsettled cash. Damn, that's crazy. AMC at 199. I should have probably waited for a pullback on Amy too, but it's all good. My calls are dated for August. I think we're going for the gap fill before August, so that's all that matters. And then GameStop pulling back a little bit, but the memes are good, bro. GameStop's up 1.41%, and they're both having green weeks as predicted. GameStop's up 3% for the week. Amy's up 6% for the week. And I also said SPY would most likely be bullish this week. Ooh, SPY's down 0.43% so far. Need a little bit more recovery, but I think full recovery by Wednesday. I think SPY full recovery by Wednesday. So by Wednesday's close. We need PPI. Oh, PPI data has to come out decent, though. That's a big factor. But I think since inflation came out good, PPI will come out good. It looks like it's going to come out slightly lower than the, or no, it looks like it's going to come out lower than the previous. So that's going to be bullish, man. If it comes out at 0, if it comes out at 0 or 0.1, it's going to be bullish. Even if, I think even if it came out at 1.0, it would still be bullish. But this 0 or 0.1 would be extremely bullish. I think even a 1 would be bullish because it's lower than the previous. But you want it to be aligned with market expectations. Inflation came out a little bit better than the market expected, which is bullish. We need to see the same thing for PPI tomorrow. Either align with market expectations or come out better. IWM has just been flat, man. I might have to extend this bad boy. Here, I'm going to extend it. It's just been flat. I have to extend. I have no choice. It's been flat all day, but sometimes when this happens, it moves one way or the other a lot. Should be bullish, especially if the market continues up. I want to see QQQ stay above 720. That would be huge.
Turnover consistent with
Yeah,
FOIA,
but when
the
you-
appropriate entries.
But when you provide it,
Amy
you don't actually put
201.
the topic of what those meetings were about.
Amy
So I've
riding
only
the
been on for
bands,
7 weeks, so I
motherfuckers.
haven't even provided it yet, but we'll fully
Okay, I'm
comply,
gonna
we'll fully comply with the law when such
just-
requests are made.
Yeah, I just think, I think what the American people want, or anybody, is not just who are you meeting, but what the topic is, I think is important. So let's get back to what you provide to the public. So when the Fed communicates less, how does the public or the committee judge whether or not the evidence was, or the method was responsibly implemented?
So I draw, Congresswoman, an important distinction.
Yes.
Our number one objective is getting policy right, and if we get policy right, we can deliver lower prices. Transparency and communication is usually quite essential to do that. So I'll draw a distinction between our internal deliberations, where we get to have a good family fight and talk about the hard issues, and then our decisions. I think our decisions are things that you should know everything about. You should understand our rationale. We should be responsible and accountable. And if we don't deliver what we say, you should hold us account.
Yeah.
So in that, I
But how
favor
you
full
del-
transparency.
Yeah, so it sounds like you will be open to absolutely being, regards to the method and the rationale and the thinking behind the decisions.
Yes.
Okay. So if, again, this is something of a concern for me, because when people say that to me, I'm like, if the Fed speaks less than public, then the words that are spoken in private to banks and invited audiences and off the record settings.
Thank you, Danny
that's why
Lamb, for the
calendar-
support.
it's
Thank
like, Don't just
you,
provide the calendar, provide what topic, because I think it's
BC Mike
important. So
and
what specific steps will you
Yakai
take?
206 for the
will
follow
you
on Twitch,
take
and
so that
BC
a
Mike for the
quieter
subscribe
Fed-
on Twitch.
that's what you
Guys, if
sound
you want to help
like
out,
towards,
please
you want a
subscribe on
quieter
Twitch.
Fed. Isn't a
Like,
Fed heard
subscribe,
only by the
follow,
well-connected?
subscribe, like on
So I
YouTube.
don't think there should be any special dispensations to the well-connected. My judgment is what matters most is the real economy.
Yeah.
Financial prices then can capture what's going on. My message more broadly to you, but also to people that are in the cottage
Good morning,
industry
Sonny
of
GG.
following the
I know,
Fed.
but the regular person out there is not going to get a meeting with you, not going to know a lot of these things. That's why I'm asking. So will you at least commit to publishing
Crypto's
readouts
up
of your meetings
nicely.
with the market participants?
I'm committed to follow the law, and
But
I'm
we should
committed
know
to
what
do
you're
more
telling-
than that.
But we should know what you're telling them, because not the 750,000 people in my district can get a meeting with you, and you want to talk to the public less. So I don't know. I just want to make sure that we understand the intent and the decisions that are being made. So in 2025, you said that Fed had, quote, redefined its legislative remit and signaled a willingness to accept a higher inflation, and all that stuff really, my folks are thinking this isn't going to impact employment, this is going to, what is going on here?
Yeah, so what went on is the Fed changed its academic framework and its operational framework, and it led to higher prices, which did more harm to the least well-off among us than any policy that I could have imagined, and so that's why we have to reform it.
MACD's going green,
Fed's
5-minute
begun that
time frame
reform, and we're
spy.
going to continue it.
Okay, last question. At your June press conference, you said that there is, quote, no cruel choice, that strong employment and low prices are mutually compatible. If there's no trade-off, pursuing maximum employment costs you nothing in terms of inflation. So, Chair, what concretely are you doing to pursue maximum employment right now?
So concretely, what we're doing is going to deliver price stability, and when we deliver that, households and
Explain that
businesses will
more.
be stronger.
Explain that more.
So I can think of few things.
Gentlewoman's time has expired, and I invite the chairman to carry on that explanation in writing, and I thank the gentlewoman. The chair recognizes the gentleman from Wisconsin, Mr. Fitzgerald, for 5 minutes.
Chairman, thank you so much for being here. Thank you. I am trying not to be redundant on the questions you've already been asked, but Chairman, the June FOMC statement reaffirmed the Fed's policy of maintaining ample reserves in the banking system. While your balance sheet task force is reviewing the benefits and risks of that framework, so if you go back to 2019, when reserve scarcity kind of contributed to stress in the short-term funding markets, what market indicators, in your opinion, should the Fed watch most closely to determine whether balance sheet reduction is moving too quickly, which is a concern?
So, Congressman, we have to look at a mosaic of information to judge how best to conduct policy. I wish there were some simple rules that we could rely on for monetary policy or clear and simple rules on the balance sheet. What we have to do right now is go back to first principles and ask ourselves whether this large balance sheet of a duration that is much higher than it was some years ago, whether that's consistent with good monetary policy. And then we're going to ask ourselves whether there's a better regime, and finally, how to get from the current regime to something else. We haven't prejudged any of those answers, but the goal isn't to be disruptive to markets. It's such that markets, the banking sector, and the real economy can understand the change and have time to adjust if we end up doing so.
Thank you. Chairman, in the interest of time, I'm going to yield my time back.
I thank the gentleman. Chair recognizes the gentleman from New York. Mr. Torres, you're recognized for 5 minutes.
How are you, Chair? Thank you for your service. During your Senate confirmation hearing on April 21st, 2026, you said, quote, "The measures I prefer looking at are things that are called trim averages, where we take out all of the tail risk." Separately, on May 31st, 2026, the Wall Street Journal reported that you want the Federal Reserve to give greater weight to the Dallas Fed's trim mean PCE. And so I want to offer a critique and then have you respond. Trim mean PCE lagged behind core PCE in detecting the inflation shock that began in 2021. Core PCE crossed the Federal Reserve's 2% target in March 2021. Trim mean PCE did not cross that same threshold until July, a 4-month lag. By February 2022, core PCE had risen to 5.4%, while trim mean PCE stood at only 3.6%, a divergence of nearly 2 percentage points. And so here's my question. If trim mean PCE detected the inflation shock later, understated its severity, and diverged from core PCE by nearly 2 percentage points, why should the Fed place greater weight on it when setting monetary policy? And to put a finer point on it, your core criticism of the Fed is that it was behind the curve on inflation. That same criticism can be leveled against your preferred measure on inflation. So why the disconnect?
So none of those are very good measures of underlying inflation. That Wall Street Journal story that you referenced is incorrect, that I have a preferred measure from one of the reserve banks. If I had a preferred measure, I wouldn't have called for a task force to go back to first principles, and the data task force will be looking importantly at inflation measures. My view is that we need new measures to understand the underlying changes in inflation. Am I interested in what's the mean or median price of a good in a big box retailer? You bet I am, and none of these measures capture that. I am super interested in finding new measures to do a better job to help us inform our decisions so that the inflation of the last 5 years don't continue.
Now, you have repeatedly described inflation as a choice. A simple yes or no question. Do you mean a choice by the Federal Reserve?
I mean a choice by the Federal Reserve and fiscal policymakers both, but I'm not trying to push the responsibility onto you. The Congress said that we're in the business of ensuring stable prices, and that's exactly what we're going to do.
So combating inflation is part of the Fed's statutory mandate, and you view inflation as a choice by the Fed. Combating unemployment is also part of the Fed's mandate. Do you view unemployment as a choice by the Fed?
We have no legislative orphans. We can't just take one part of the statute you give us and disown the others. I will just add a touch of complexity. We have more control over the price level ourselves than we do the unemployment rate. We have some say there, but so do all the policies that you and your colleagues put into place.
But obviously, if you aggressively raise interest rates, that could have the effect of causing unemployment. So in that sense, it's a choice, right? There are multiple forces that shape both inflation and unemployment, and the Fed is one among many. Quantitative easing. Do you believe quantitative easing is inherently inflationary? Yes or no, and then?
That question I can answer simply. I don't think it's inherently inflationary, especially if we adopt quantitative easing in the depths of a crisis. It can often provide liquidity to markets that need it.
So from 2008 to 2014, the Federal Reserve's balance sheet grew by a factor of 5, from about $900 billion to about $4.5 trillion. Yet over the same period, average headline PCE inflation was 1.7%, and average core PCE inflation was 1.5% below the Fed's 2% target. So the notion that quantitative easing may be inflationary fails to explain the non-inflationary effects of a multi-trillion-dollar five-fold expansion of the Fed's balance sheet from 2008 to 2014. Can you explain that for me?
Yes, Congressman, I can. If the balance sheet expansion were our only policy tool, then that is a reasonable conclusion to draw. But we have several policy tools. The dominant one is interest rates. And so we need to think about both of them in the context of monetary policy. I want to quickly
interject. Do you believe changes in the size of the Fed's balance sheet have an effect on inflation comparable to changes in interest rates?
You had me except for comparable. They can substitute for each other. They can complement each other.
But you don't see them as comparable?
But the balance sheet, they have different effects. The balance sheet tends to work more through asset prices first.
And I want to
interest
interject.
rates more through the real economy.
Do you acknowledge that IORB weakens the relationship between the size of the Federal Reserve's balance sheet and inflation?
Not precisely. I don't know if I can answer that fully in one
You
second.
need to answer it in writing, and it'll be very interesting because these were good questions.
I look forward to doing that. Thank you.
With the time we have remaining that the chairman's allocated us, the chair now recognizes the chairman of our subcommittee on housing and insurance, Mr. Flood, and I recognize you for 4 minutes.
Thank you, Mr. Chairman, and thank you for being here, Chairman Warsh. I'd like to begin by emphasizing the importance of the independence of the Federal Reserve. Markets rely on our financial system and the dollar as a stable, safe place to put their money. The stability of our financial system is at the center of our global influence. Our adversaries know that if they can break our debt markets, if they can break the dollar, they can remove one of the largest and most significant advantages we have as Americans. The strength of our system and, in turn, our ability to stand up against foreign adversaries that seek to destabilize it is partially a function of having an independent Federal Reserve. If we lose an independent Federal Reserve, we will lose the confidence of people around the world that use the U.S. markets and the U.S. dollar as a safe haven, and that would be devastating for our economy and the economic security alike. Thank you for your work. I want you to know that I strongly support your ability to operate in an independent fashion. And to that end, Mr. Chairman, before I get into the rest of my questions, I wanted to give you an opportunity to speak on the importance of an independent Federal Reserve.
Thank you, Congressman. I'm happy to do it. The Fed will remain independent on my watch. Fed independence is essential to the proper conduct of monetary policy, and I expect and will ensure that monetary policy is independent over the 4 years of my term. And like you, I think it provides extraordinary benefits in everything we do and strengthens the role of the United States and the U.S. dollar in the global economy.
Really appreciate that. Next, let's talk about the Federal Reserve's balance sheet, kind of following on what Mr. Torres was talking about. I've had longstanding concerns with the effects of the long-term effects of the Federal Reserve's balance sheet. In particular, I also worry about the use of quantitative easing in times of economic trouble. It can take a long time to unwind, leading to a Federal Reserve balance sheet that continues to grow and grow over time. Mr. Chairman, would you mind commenting just broadly on the use of quantitative easing in monetary policy?
I'd be happy to do it, Congressman. In periods of crisis, when markets aren't clearing, I am willing to be quite aggressive in what the Fed does with its balance sheet, the assets that we buy as necessary in unusual and exigent circumstances. But when crises are over, monetary policy, in my view, should be driven almost exclusively by interest rate policy. One of my former colleagues said it best when he said, interest rates get in the cracks. I'll go on to say, interest rates don't favor one class of people versus another. They don't favor those that have financial assets more than folks that are living off their bi-monthly paychecks. So I like interest rates as the dominant ways to make monetary policy, and I'd prefer, all the things being equal, to use balance sheets when the crises are real. However, I've inherited a very large balance sheet with a very complicated set of assets, and I am open-minded to reforms, as are my colleagues, and I'm keen to continue to work with this task force to achieve that.
Real quick, and I'm skipping to the end because this question matters a lot to me. I have a lot of community banks in Nebraska. It's the lifeblood of agriculture. Can you talk about how you see supervision working and respecting the role of a community bank, especially in rural America?
Congressman, as I mentioned to you in your office, I'm a big believer in the diversity of financial institutions. The U.S. economy benefits enormously by not having a half a dozen big institutions at the top do everything for everybody. The ag community, other communities are well served by the banks that are closest to them. Supervision and regulation needs to take that into account. The thousands of banks that we have are an enviable good, and the Fed needs to do what it can to support them.
Thank you very much, Mr. Chairman. I yield back.
Gentleman yields back. I want to thank Chairman Warsh. This is season 1, episode 1 of Warsh at the Fed. We look forward to episode 2 tomorrow. We want to thank you for your testimony today. Without objection, all members will have 5 legislative days to submit additional written questions to the chair. The questions will be forwarded to the witness for your response. Chair Warsh, please respond no later than August 18th, 2026. And with that, this committee hearing is adjourned.
Thank you.
All right, so I'm up on the spot 750, but I'm down on the 753. Oil's still up, but coming down a little bit from 80. Why the I keep trading? Trading is good. IWM not moving. And the testimony is over. There's going to be another one tomorrow. Let it capitulate, then push up, bro. It'll be all right. Apple trying to come back, 314. Apple 314. Okay, coming back a little bit. Down 48%? Bro, I'm down 80% on my IWM call, bro. It could always be worse, trust me. What if Apple just pumps? I was able to make fucking $150 this morning off of SPY calls because the account was down to 400, under 400. I got it back to 700. But now I'm back balls deep in the options trying to get it back to 1,000. I'm in 2 SPY calls, an Apple call, an IWM call. Trying to get it back to 1,000. I think SPY's gonna go up, bro. 754, 755. This is a classic Data Zero beat. Classic, bro. Only the OGs will remember this. I'm up 70 on my SPY call. Should I let it go or hold or ride the dragon? Should I let it go or ride the dragon? We're at 742. I'm up $72, man. I need a home run, dude. We need to get this to $100. We're down 150 on Apple, 43 GME, 7 on the AMC calls. We just bought more AMC contracts, by the way. August, these are August contracts. We're only down $2 on those. We're up 77 on SPY. We're down 52 on this SPY contract, up 78 on this contract. We're up $75, man. I might have to cash this out. I'm up 28%, up $75. $77, man. This is crazy. 79. $80. $81. I bought this off the 750 retest. I bought this when SPY retested 750. I'm up $81, bro. Let No Dragon. I have another call, so I'm not going to be completely out. I have another spy call. I think SPY's going full bullish, though. I think it's going to 754. By Wednesday, it's going to be up, dude. Dude, if I would have bought 2 contracts down at the 750 retest, that's why I have to be patient, bro. I could have did crazy numbers. I could have bought 2 contracts at that 750 and been up stupid. If I just waited. I sold 1 contract. I have 1 contract left as a runner. I had to deleverage some of my positions. I had to. I have another contract left as a runner. Plus, I think SPY's going to pull back a little bit and then go up. So I sold 1 contract for $85 profit. Yeah, Walsh does seem to have a plan. Powell seemed like he was all over the place. Maybe that's one good thing Trump did. Put Walsh in there. AMC at 198, GameStop 22.33. All right, SPY pulling back, SPY pulling back. Good thing I cashed out. And I have 1 runner left. And I can always go back in. I can always buy another call dated for tomorrow now. All right, so we need to tie up some loose ends here on IWM, SPY, and Apple, and then we'll be fine. We also need to make some more winning trades. That one was a nice $70 banger. We also traded a 0-day today for like $100 on this move. We traded a contract dated for tomorrow on this move. The whole move, this whole move we got from down here to here. I literally bought it down here. In fact, I bought it here. And we just sold it. We just sold the contract. We have 1 more contract left, a 753. Dated for tomorrow. We have an IWM 296 dated for tomorrow, and an Apple 31750 dated for tomorrow. We're looking for another flip. If we can make another $100, that will put us where we need to be. Nvidia's climbing. Nvidia's climbing. It did not pull back. Nvidia's climbing. It did not pull back. Nvidia's going wild. Nvidia's going wild. Meta pump and then dump. Crypto is up very nice. I'm up on the crypto I bought the last weekend. AMC 197. All right, I have one SPY call left. I have one SPY call left dated for tomorrow. Want to see what this thing can do. $70, that's gas, lunch, and a dub sack. Fact, bro. I think I cashed out for 85. I did 2 decent fucking SPY trades today. I almost got out for 100 plus on this move, but it went too fast. I bought off the falling wedge and sold up here. We bought a 0 DTE. We almost got this move and it was 100 plus in the money, but we waited and sold here. But we also made the mistake of going back in here. I should have bought 2 contracts here and just did that and been done for the day. That would have been a huge play. I would have made 160. Instead, I had a contract here and I had a contract here. This contract I'm still down on. This contract was deep in the profit. I took profit on it. But if SPY goes up, that will take the contract in the profit and I'll make money. If SPY goes down, I'm going to be deeper in the red. But at least I have capital to deploy. Apple's coming back for 315, bro. Apple's getting a nice pump right now. Nvidia and Apple getting a nice pump. Taking the market higher. I kind of want to get in on another SPY call. IWM still flat. AMC 196. AMC, as long as it stays above 195, we're good. Poet breakdown.
Dollar Poet
I got
breakdown
you.
plaza. Falling wedge.
Thanks for the 2-piece, dude. All right, so this is a good buy low, sell high. I kind of see a falling wedge. You definitely have a trend line break. Yeah, you could buy this and make some money. It's not a full falling wedge though. You're cutting across here too much. You got a trend line break though. I would say if it breaks and holds $9 bullish. You want to see it break and hold $9. That's going to be your level. Neo tracked perfectly, bro. Wait, did I say it was going to pull back? No, this is my prediction, right? Todd, where are you at? If AMC had no dark pooling, it would go to 300. I should have played Neo with Todd. Hims is going back to 35. Hims is breaking out. Hims bull flag breakout. Hims bull flag breakout. Could go back to 35, 36. Yeah, Poet, you could probably get a nice little buy right now on Poet. Spy Rippy, Spy Rippy, Spy Rippy, Spy Rippy, Spy Rippy, Spy Rippy. Spy Rippy, Spy Rippy. Spy's trying to go bullish on all time frames. Spy's gonna pump, dude. We loaded up Spy calls. Loaded up Spy calls. Loaded up. Loaded up Spy calls. I'm in a 752 and a 753. Fuck what you heard. If I go down with the ship, I go down with the ship. IWM trying to come back. IWM trying to come back. Apple trying to come back. Yeah. Let's run it. 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 Let's keep it 100. Let's keep it 100. Let's keep it so real. You already know what it is, man. You know the deal. Trying to make a mill. Big risk. Gotta take it off for real, man. Big position size. $500. Put it all on the line. Bro, we putting it all on the line right now for real, bro. Our whole account's on the line right now. We have no buying power left. We are in the trenches right now, ladies and gentlemen. I'm up 850 on my new Spy call. I'm up 850 on my new Spy call. $10 on my new Spy call. $10 on my new Spy call. Down 35 on the other on the other one. Let's see if we can bring them both in the green. Let's see if we can bring them both in the green. We're playing Spy calls. Yeah, Poet looks pretty decent, bro. We'll keep an eye on it for you. AMC getting a decent bounce back to the upside. Yo, Spy is rippy, bro. Spy is rippy. What if it goes for the gap? I think it's going to 754. Come on, IWM. I know you can do this, bro. IWM has got to make a move soon, bro. It has to. It just broke the downtrend, falling wedge. It's got to make a big move, bro. If the market keeps going up, IWM's going to have to go up, bro. I think QQQ and SPY are going to push. QQQ has a big gap up there to fill. We're double SPY called up. Date it for tomorrow. SPY's about to do its thing, bro. Full recovery by Wednesday, like I said. I told you guys today would be recovery, and then full recovery back to 754, 755 by Wednesday's close. Probably sooner than that. If Apple breaks and holds 315, bro, it's going to come back. Yo, all-time high, are you still in Apple? All-time high, are you still in Apple? It's going to come back, bro. Apple's going to come back. Be careful right now. Tight stop loss. Definitely use stop losses, bro. Definitely use stop losses. Shit gets real. All right, SPY having a little trouble with these levels. Dude, IWM has just stayed completely sideways. Completely sideways. It's pulling the AMC, an old AMC right now. If AMC can break back above the orange line, we could have a pop in the close on Amy. Amy could pop in the close. We did call for a nice move up on Amy today. I did tell you guys Amy would be starting to move up. AMC cost to borrow. Really moving up, guys. AMC cost to borrow 1.49%. Are you guys seeing this? I told you if cost to borrow goes up, price goes up. That's all you need to know on meme stocks. Cost of borrow goes up, price goes up. SPY about to do its thing, bro. Apple's trying to break back above 315. Intel is pushing up. I told you guys Intel would push up. Intel, I think, is going to go up. Meta is also coming back. And NVIDIA. Semiconductors are back. Semiconductors are back. Look how green semiconductors are. Look how green semiconductors are. If Apple was green right now and Microsoft, we'd be pumping. Google's green, Meta's green. Look at this. The semiconductors, very strong. You gotta watch those semiconductors when it comes to the market. If semiconductors are green, SPY can be green. And, but QQQ will definitely be green. Like if semiconductors are big green. Yeah, I did a little bit of the FOMO thing again. I took profits on a call and went back in a call. You don't do that. You wait for the pullback and then go in. But I think by tomorrow it won't matter. So that's kind of also why I'm doing what I'm doing. I think by tomorrow, I think SPY will be back at 754, 755. That's exactly, I did that. Yup. Yeah, dude, it happens to the best of us. You never take profits on a call and go back in immediately. Always wait for the pullback. Especially, I know hindsight's 2020, but especially if you have been trading for a while, you'll naturally take profits at spots like I did that are tops. Even if it's just a closed top, like let's say SPY does just bounce and pump all the way back up, right? Okay, but as a trader, you're always gonna take, especially when you get good at it, you're gonna take profits. This was a falling wedge, by the way, that we bought on the 750 support level. But yeah, we bought here and sold up here. But you'll naturally take profits at a good zone. So always wait a little bit. Even if you're still bullish and you're still thinking it's going to go up, you're just taking profits to lock something in. Always wait a couple minutes to see if it pulls back first. And if it goes up a little bit more, let it go up a little bit more because it might pull back. Just wait 10, 20 minutes before you re-enter. That's my pro tip. If AMC closes above $2, it's over. Because I think AMC is going to get a push in the close. AMC closes above $2, it's over, bro. We're gonna pump. Did you see that guy coming on? He's like an AMC shorter. He was all mad. That's how you know AMC's gonna pump, when people start getting pissed that AMC is such a divisive stock. I can't believe people get so irritated that it goes up. They even get mad if you talk about it. People are like, "Why are you pumping the stock?" I'm literally just covering the news and the technicals and what I believe. They're like, "Why are you pumping it?" I literally think a rally's coming. I'm telling you what the charts are telling me. Now the stock is up. Green week like I predicted. What do you want me to do? Bro, I'm loaded up on AMC calls, SPY calls. Multiple SPY calls, multiple AMC calls. We got contracts on contracts right now. We got calls on calls on calls. SPY tracking perfectly, by the way. I think SPY's gonna go for this gap fill. That's what I think. And if SPY does go for the gap fill and I'm right, I want to get paid. So if SPY goes for that gap, I will make a lot of money. Let's see. If SPY goes for the gap, I should make, at minimum, bro, at minimum at least 150. If not 250. 752, 753, 754. I got 2 contracts. You should have seen how crazy it moved when this random pop happened. It was nuts. I think that's manipulation sometimes, but I could be wrong. But normally when this happens, the price comes down and then it goes back to where it was. And that's exactly what happened here. It came down. It went back to where it was. If SPY breaks and holds 753, it will pump. That's all I'm telling you. A break and hold of 753, we pump. I think by tomorrow, Wednesday, full recovery. 754, 755. Dude, I don't know what's going on with IWM. IWM doesn't normally do this. I have no idea what's going. This is actually wild. For an index, the barcode like this is very strange. This is very strange. This is not normal. Normally when this happens, though, it means it's going to pump one way or dump. I think pump, but... Also, another thing you can look at is normally when a stock does this, especially SPY or QQQ, pumps up in the pre-market, it will normally return to those levels. It might take a day or two, but it normally will. So 754.17 is the price target. Plus we have the gap fill at 754.15. All the way to 754.85. They're probably doing this to IWM because of GameStop and AMC. Because if IWM pumped right now, AMC and GameStop would rip. Especially AMC. AMC is literally part of IWM. Of course, I could just be making stuff up. But how often do you see IWM do anything like this? This is very strange. Price is definitely coiling up, though. It's going to move hard. Right now, we have all red MACDs, though. That's not good. Except for the bigger time frames. The bigger time frames look bullish, which will override the smaller time frames. We just broke this sloping support and resistance here. We had the falling wedge breakout above the 20 moving average. On the 1 hour, the 2 hour we're below. We need to get above it on the 4 hour below. So there's some bearish signals here, guys. We gotta be careful on IWMers. Gotta be careful. Anyone who bought a call yesterday, though, doesn't matter where you bought it. You could have got out this morning. Hopefully IWMers makes a move here, man. SPY 5-minute MAC moving average curling up. SPY tracking too stupid, by the way. What happened? Lucid down 50%? I don't know, man. Maybe bad earnings? For a stock to drop 50%, that's a lot, bro. If SPY can just get the 753 and hold that bitch, bro, we will pump. Amy's gonna come back before close. Watch. Before close, it's gonna pump above $2. Remember though, PPI data drops tomorrow. And if that shit comes out bearish, it's over. We're seeing a decent little pump now because of inflation coming out good. Yo, IWM mad boring right now, bro. Dude, I am just praying this thing pumps up, man, like I'm saying. I might have to extend again, bro. To the very end of the day. Maybe we'll get one of those classic end-of-day IWM pumps, though. We might get one of those classic end-of-day IWM pumps. Yeah, I pointed that out about AMC's cost to borrow. They have 10 million short shares. AMC's cost to borrow 1.49%. Cost to borrow up, price go up. I think bulls might start taking full control here soon on SPY and QQQ. Apple's trying to fight for 315 again. SPY getting pretty bullish. And honestly, you love to see it. 134 in the building right now. Right, 134 in the building right now. Please prime sub. Please prime sub. AMC is gonna break back above $2 as predicted. GameStop also looking like it's going to make a move. Bitcoin almost at 65K. Let's go. Like and subscribe if you haven't. We're at 2,000 or 17,201 subscribers. Thank you. On YouTube. 166 followers on Twitch. We need to get our subscribers up on Twitch, y'all. I might even do like some sub giveaways. So come follow. Because I might buy some subs to give away. So if you come follow me, you might get a chance to get a free sub. I might gift some subs on Twitch. Thank you, Fishy Friends, Danny Lamb for the super chats. Jackson with the 5 gifted. Yeah, boy. Let's go. Five people just got free memberships from Jackson, Timbo, Grant, Josh, Jung, Pout, just got gifted, 5 gifted from Jackson 610. Yeah, boy. Let's go. Let's go, baby. Thank you, Jackson. I truly appreciate that, bro. Helps out a lot. This month's been slow. Whoa. This month's been slow, baby. Thank you, brother. We got 17 subs and like we got no members either, man. This month has been slizzo. We only have 297 members, bro. On YouTube. That's still a decent amount, but still. We normally have like 400 or 500. GameStop's about to go for a new high, potentially. Dragon, thank you for being Twitch gang. IWM is stagnant, bro. It might be stagnant till we get volatility at the end of the day, bro. Apple just reclaimed 315. Apple just reclaimed 315, y'all. Bano wants GameStop to go. This is a decent double bottom on Apple. Is anybody still in Apple? Is anybody still in Apple?
Classic, you crazy.
5 more likes. We need 5 more likes, guys. We need 5 more. Spy is spying. It's doing his thing. Meta coming back. Intel really moving up now from when I called it out. Nvidia on an absolute moon mission. Google's also looking nice. Google might be breaking out of a falling wedge, bro. I mean, at the very least, it's breaking a downtrend. At the very minimum. We're losing a little momentum. I can see it. So what we might see is a little bit of a pullback heading into close and then a push back to the upside. GME new high, GME new high, GME new high. No, not yet, bro. Not yet. Not yet. This one was higher. Believe it or not, this one was higher. It will take it to the highest one. It's higher by a few microcents. IWM might finally pick its ass up to... Hopefully SPY can keep green MACD 5 minute. That's what I'm worried about. If we lose green MACD 5 minute, I'm worried. We could get a pop here though. We are curling up. Bands tight, green MACD above the blue medium line. We could get a pop. Which would be really good for me. I hope we go for this gap, baby, please. AMC also coming back, guys. I told you it would. It's probably gonna close above $2. And then Apple pushing up. Is there anyone left in Apple? GameStop warrants are going crazy. GameStop warrants are up 9%, guys. GameStop warrants up 9%. Drop rockets in the chat if you want your favorite stock to go up. Drop rockets in the chat if you want your favorite stock to go up. I want to see rockets in the chat if you want your favorite stock to go up. You guys don't drop hype no more. You guys don't drop rockets no more. Come on. What happened to the family? Jackson just dropped 5 gifted. We didn't see a single hype. AMC's up 6%. We haven't seen any rockets. What is wrong with the fam? Jackson dropped a 5 gifted. We didn't see no hype. Yeah, wake up, everybody. Wake up. Dragon dropping it. Okay. Sunny GG with the super fire. Look, and it's helping. It's working. AMC's going back. AMC's going back. It's working. DH, iPhone, Manuel, Kai Supreme, Uriel, Gods. Yo, God's gift, thank you for the jewels. God's gift, thank you for the jewels. We need a few more likes. We need a few more likes for the goal, guys. We need a few more likes for the goal. I'm trying to get 105 likes. 1 hour till power hour. 1 hour till power hour. GameStop new high 2247. GameStop new high 2247. SPY's kind of crazy right now. AMC 198. AMC needs to break the orange line. If it breaks the orange line, it's going to push back above $2. IWM 294.64. SPY 250, 752.43. If it breaks and holds 753, bro, you're going to pump. If SPY breaks and holds 753, it will pump. Is anyone in SPY calls? Is anyone in SPY calls? Drop those rockets if you want to see your favorite stock go up. Drop those rockets if you want to see your favorite stock go up. Nvidia's a beast today, I know. Just pulling us up, baby. Just pulling us up. Nvidia's a monster. Absolute monster right now. SPY might be losing a little bit of momentum now. Want to see if we can stay green 5-minute time frame. Guys, if you can, hit the like and subscribe. Hit the like and subscribe. AMC tracking. AMC tracking. Yeah, GameStop right now. 22.41. Intraday high 22.47. SPY. Thrive. Yo, IWM, bro. We've never seen IWM like this. That John just sideways. Bro, bands are hella tight, bro. If IWM gets 10-minute green MACD, look out for that. If SPY keeps going up, IWM has to go up. Accidentally bought a 0 DTE instead of buying a call that was dated for tomorrow. I had to get rid of it. I sold it for a very, very small profit. I didn't realize it was 0 DTE. Could be a slow grind up on SPY. We're definitely losing momentum, but it's not coming down. I'm trying to wait for a pullback. And if it pulls back, I'm going to buy a call dated for tomorrow. Maybe a call dated for 2 days. Apple's still holding 315, but it might drop down as well. Yeah, we just got red MACD 5-minute time frame. I sold the 0 DTE for a small profit. Literally like $5. I was gonna hold it till tomorrow. If it was a call dated for tomorrow, I would have been green. I'd have been big green. Somehow I sold it here. I put a limit order in for $295, even though the market only said it was worth $293, and it gave me the $295 limit order, and it went through. So maybe sometimes try that, guys. Apple might pump in the close. This John's coming back, bro. It's flipping back bullish from the hourly. It's trying to flip back bullish. GME brand new high, guys. GME brand new high, 22.48. Up 2% on the day, baby. Love to see it. AMC's up 5.62. GameStop's up 2.02. If Amy breaks above, this might be like a falling wedge. If Amy breaks above, got this falling wedge joint. Memes are up, baby. Memes are up. You love to see it. Yo, NVIDIA's wild. NVIDIA's wilding, bruh. Yo, NVIDIA wilding. Damn, I might be toast on this IWMers, man, unless this shit pump by the end of the day. What is it doing? How is it so weak and the market is so strong? SPY just got 5-minute MACD, 5-minute time frame, so be careful. Bro, if SPY pulls back, I'm getting a call dated for 2 days. This thing looks bullish, dude. SPY is bullish. The 2-hour MACD just went green. Look at this. This is so bullish. Look at this. We're in an uptrend. I wanna get a call. I wanna wait for a pullback though. So the only way I'm going to do it is if it pulls back. I'm going to get a call dated for 2 days. Paying for time, I think, is better than more contracts. Like if we pull back heading in the close, I could be wrong. It's a huge risk, but I need a big dub. I need a fat dub. I need a fat dub, bro. And I think SPY is bullish. I think QQQ would be even better. but I'm gonna stay with my SPY. QQQ hasn't given the same signals as SPY. Daily MACD is still red. SPY daily MACD is green. SPY 20 moving average daily is curling up. SPY 4-hour moving average curling up. 2-hour MACD just went green above the 20 moving average. 1 hour curling up, green MACD. Above the 20, above the 20 on the 30, above the 20 on the 15. We're above the 20 on every single fucking time frame. Okay. Did we get some news? What just happened? Trump drops plans to surcharge ships, but will restore the blockade. That just came out. Bro's an idiot. No one was gonna pay his tax. IWM dumpy, IWM dumpy, IWM dumpy. Hopefully it dumpy to pumpy. How will this SPY pulling back? Will it affect AMC and GameStop? AMC falling wedge. GameStop and AMC not affected. GameStop and AMC not affected. Intel has pushed up a lot. Intel has pushed up a lot. I told you guys Intel was going to go up. Intel has pushed up a lot since I called it out. We called it out down here. The chips, the semiconductors are on fire, guys. The semiconductors are on fire. NVIDIA, Intel. NVIDIA might be getting close to a top, but it could still go up more tomorrow. But RSI is wicked hot, and the MACD is starting to come down now. If we get a decent pullback, I'm going to go in on a 3-day call, SPY. AMC falling wedge, AMC falling wedge. Misty Blue, what up? Dropping the rockets. Yeah, I can finally see chat now. I have both my screens. 15 minutes till power hour. 15 minutes till power hour. GameStop 2243. GameStop 2243. Apple 315. Can Apple come back? Can Apple come back? Oil still at 79.47. What I'm thinking we might see is like a slight pullback heading in the close and then a bounce. And if you buy that dip, not financial advice, similar to if you bought the dip. But you have to remember PPI. The same thing happened yesterday. We had the sell-off and then the bounce. And if you bought that dip, by the morning you were up. I think we could see something similar happen. It's very risky though because PPI data has to come out tomorrow. And that has to come out good. AMC does have green weekly MACD. Falling wedge, AMC falling wedge. It could break out tomorrow. It might not break out at the end of the day. It could break out tomorrow. I'll be very surprised if SPY doesn't pull back heading in the close. We need to know if that's going to affect AMC or not. 10 million short shares AMC. GameStop 22.45, bro, and holding. Wonder if Apple can hold 315. A lot of buying just came in for SPY. That's crazy. Someone bought the dip immediately. AMC at 195. AMC 195. Want to see it hold that. You want to see it hold 195. If we lose 195, that will be a little bit of an issue. Not much, but a little bit. Want to see it hold 195. Uh-oh. Will she pull back or will she pop? White dotted line OP, I don't know. Trying to get in this 3-day call. If not, I do have one call option. Had to sell the 0 DTE. Didn't know it was 0 DTE. Run it back. I'm trying to get this thing right now. Yo. I'm trying to run it up. Inspire is all I know. Buy it all that. Oh, I did buy more AMC contract YOLOs. I did buy a couple more AMC YOLOs. IWM, come back. IWM, come back. Market pumpy in the club. Come on. It's SPY dump. IWM gonna pull back. It's too barcodey. I'll be very surprised if SPY doesn't pull back, but a lot of buying just came in right here, man. A lot of buying just came in. What are we seeing? Apple pushing. Can it come back? Find out on the next episode of DD. Oof. Want to see Amy hold 195? Can she hold 10 million short shares? IWM curling up just a little bit. GameStop holding up crazy. Bought a couple more AMC YOLO. What is SPY doing? Yo, I can't believe I never seen IWM stay flat all day long. It went just less and less and less volatile until it's like... I've never seen that, bro. Manipulation at its finest, family. Ain't no way an index's price is staying like that, bro. There's no way. Not an index, bro. Too much volume, too many things contributing to the price. There's no way. There's no way, bro. It's gotta make some type of movement. This has been ranging. The most you could have did was buy a call, put, call, put, call, put. You could have did it back and forth, maybe made a fortune. I think we pull back heading in the close on SPY, but we'll see. We're below the 20 moving average red MACD. 10-minute red MACD, but we're still above the 20 on the we're still in a pretty strong uptrend. Volume's increasing. Yo, GameStop just hit 22.52, bro. That's what's up, bro. GameStop is looking pumpy, dude. Look at it. It followed my prediction perfectly. Pumped right back up. And AMC and GameStop are going to go up. Especially if SPY rally continues. QQQ's green 1%. SPY is green 0.37%. IWM's green 0.27%. Guys, if you want to support for free, like and subscribe, like and subscribe, like and subscribe. We have 101 likes, 129 people on 133 on YouTube, 7 on Twitch. GameStop's up a good bit, guys. Yeah, SPY's coming down. Apple came up a good bit. Yeah, Apple's coming back, dude. Let's go, GameStop, baby.
Enrique!
Yeah, boy! GameStop 2250, boys. 2250 DZ fam. AMC. I need my chair back. This chair is uncomfortable. I need my gaming chair, bro. Should I bring it? Should I go get it? It'd be way too fit. I guess I could fit it in the back of my truck. That'd be too much stuff to move back, though. Hold on. Fucking Apple's almost at 316. If I can get Apple back to 317.50, bro. If we could get an Apple pump tomorrow or something like that, bro, we're like, yeah, bro. Yeah, that would really help your boy out. That would really help your boy out. I don't know. Spy's trying really hard not to break down. And some big ass whale bought right here. Normally follow the smart money. Amy, we want to see back above $2 if possible. Thank you, Jackson 610 for the gifted. Thank you, Mike for the sub. God's gift for the jewels, Danny Lamb. Thank you. Fishy friends. This market is super messy, bro. It's because Trump got it all crazy. Oh! Amy, where art thou? Oh, Spy dumped, that's why. Oh, no, it didn't. I thought it dumped for some reason. Did IWM dump? Anything happen? No, we just gotta pull back. Okay. Come back, baby. Sometimes these come back, though. If Amy can get back above 195. Oh, I thought it said all-time high gifted 5 subs. I was hyped. That was 5 days ago. Still, thank you. Oh, it is officially power hour. It is officially power hour. Bro, Intel went to 109 since I called it out. Intel's definitely going up. Wait, if this is the meta falling wedge, we gotta play meta. Last play we had for meta and we missed it, it printed $500. This could be what we need to bring everything back. It would be a huge risk. How much is a meta call? Look, it's already pumping. As soon as I call it out. Bro, one day $700. Damn. It's gonna work too, bro. Put the prediction there so I can say I called it at least. We got some pullback on SPY, but not much. Hood, I don't with Hood only because they rob people, bro. Nah, that's too sloppy. It's too sloppy to be the falling wedgers. But if you think it feels right, go for it, brother. A 3-day call for SPY is 276. A 2-day call. Oh man, SPY might pump in the close. If it stays above this orange line. They robbed all of us? Yeah, I know. That's why I can't invest or trade Hood. I just can't. Absolutely not. All right, be careful on SPY. The MACDs are going red, bro. We got to get some type of pullback. Oh, they're dark pooling, bro. Look at the dark pool levels. It's probably 70%. I didn't even look. I didn't even look at dark pool all day today. 70.99%. I didn't even fucking look. 16.4 million shares. I told you it was 70% off rip. I knew. I didn't even have to look, bro. I didn't even have to look. Most manipulated stock in the market, bro. Can IWM do something? Go SPY? See if SPY can break this trend line or not. Alright, I gotta stand up. This chair's too ass. Face cam gotta go off, guys. I try to keep face cam on as long as possible, but man, I just be standing here like this most of the time. This is all you guys would see. I don't know if this is what you want to see, bro, so. I don't know if this is what you want to see, so. It's like, I'm kidding. I'm kidding. I'm kidding. I'm kidding. Apple just pumped 20%. That'd be sick. My calls just explode. I'm trying to catch a pump. Bro, Spy has to pull back. What is happening? The dance. AMC 195. Want to see it hold 195. GameStop 2250. If we close above 2250, that's huge on GameStop. Even 2240. GameStop warrants up 8%, by the way. SPY is at 752.20. Want to see SPY at 753. I want to see a SPY at 753. QQQ trying to come back, bro. QQQ trying to come back. About to get that QQQ dated for tomorrow. About to get that QQQ dated for tomorrow. You feel me? John 340. It's a big chunk of change. Come on, IWM, pumping the clothes, baby. Do it. I want to see IWM pumping the clothes. Oh, shit. SPY pushing up here a little bit. Yo, SPY's pushing in the close. Bro, I feel like a QQQ dated for tomorrow would print. I also feel like a call dated 2 days out on SPY would print. Apple moving up nicely. Meta breakout, disgusting. I tried to say it. The call option is up $500. The call option is up $500. At least I called it out. At least I called it out. It was the least I could do for the family. Trust me, I wanted that. That could have saved my whole account just now. That one little move. That one little move could have saved everything. And I think Meta's still going to go up heading in the close. But it went exactly to the level I said, right here, and pulled back. It was the least I could do for the family. AMC, want to see back above 195. Want to see AMC back above 195. GameStop 2247. Meta pump. Bitcoin's up a decent bit. So is Ethereum, XRP. XRP at 111. Stellar at 18. Ethereum at 1.875. Bitcoin 64.5. Okay, SPY getting a little crazy here heading in the close. That's definitely going to affect the market. Apple trying to grind higher. QQQ pullback, QQQ pullback. Bro, if SPY gets above this, if SPY gets above this 20 moving average, it's gonna pop. Yeah, SPY just got the pop off of that 20 break. Power half hour. Yo, thank you, Todd, for the 5 gifted subs, bro. You didn't have to do it, bro. Tyler, Demi, Koa, Spider, Robert T just got gifted.
Enrique!
Thank you, bro. Absolutely helps out a ton, brother. Keeping the dream in the stream alive. That puts us at 10 brand new members today, by the way. That's pretty good. Thank you. Grateful. Very grateful. And we got a new subscriber, too. On Twitch. If you guys want to help out, like and subscribe. GameStop pulling back a little bit here. QQQ might double bottom here, bro. If it can break above the orange line, QQQ will pump. Come on, Amy, come back. Get a pump in the close, baby. RSI's oversold. GameStop coming down, but it was outside the bands. Gotta cool down a little bit. Spy winding up. Dude, IWM robbed the preem today. Woo-wee. Yeah, hype for the chat like Misty Blue. Hype for the chat like Misty Blue. There's 15 minutes remaining. 15 minutes remaining. They're gonna fight hard to keep AMC under $2 because of the $2 expiration. It's an expiration this week, bro. They will have to hedge for those calls. Especially expiration coming up, people could exercise. SPY ain't doing nothing, bro. Pump, bitch. IWM's trying to come back. Oil at 79.88. SPY's getting crazy. Still sideways on SPY. Market sideways, boys. Sideways. There is 9 minutes remaining. 9 minutes remaining. They shorted Amy out of the falling wedge, dude. Most manipulated stock you'll see in the game. They shorted AMC out of the falling wedge. Easily made a falling wedge, could have bounced. I still think we might bounce, but it's annoying. SPY is completely sideways. Hate it. I hate sideways. Hate it. As a trader, I want volatility. Wow, market sideways in the close. Poo. Boo. Can we get some pumpage? Let's get some pumpage. Let's get some pumpage. If SPY could push up, maybe it'll help get some momentum on IWM and then start getting some momentum Amy's. You know how it flows down the train. GameStop got a nice little bounce heading in the close. I repeat, GameStop, nice little bounce heading in the close. 22.50 or 22.43. What if SPY just pumped like all the way to 753? That'd be so sick. All right, Apple's pulling back. We got to push up, but it was only to 315.87. It wasn't to 316 like I wanted. Still above 315 though. That's a good sign. If we can close above that. We'll see here. All right, SPY dropping down a little bit here. SPY getting really crazy. Yeah, they dropped us down, bro. Easily could have popped. They dark pulled 70%, shorted. Dropped us down. Amy's still tracking, though. But we need to see that $2 push, man. We need to see that $2 push. We gotta extend this trend line. We have to. This is the magic line we gotta break. I think it's because SPY pulled back a little bit too, though. Oh, IWM trying to make a little something happen. We have 4 minutes remaining. 4 minutes remaining, and it's getting wild. 4 minutes remaining, and it's getting wild. 4 minutes remaining, and it's getting wild. All right, guys, we just have a few minutes remaining. Few minutes remaining. IWM trying to finally push up a little bit. Just a tiny bit here. QQQ. SPY. SPY trying to push for 752.50. Kind of crazy. All right, we're getting volatile. We're getting volatile in this bitch. Amy. Let's go. Guys, drop some rockets, drop some hype, drop some rockets, drop some hype. GameStop also getting a bounce. It's because IWM trying to come back. Look. Amy 196. Amy 196. I told you, pumping the close. Amy pumping the close. Amy pumping the close. Amy pumping the close as predicted. Amy pumping the close as predicted, and GameStop pushed up too. If we close 195, bullish. 1 minute remaining. 1 minute remaining. 1 minute remaining. Spy. Dope. What the fuck? Where did we close? All right, boys. IWM closed at 294.50. 294.45. Sorry, I'm stupid. QQQ dumping in the close. SPY dumpy in the close. 751.86. SPY close. Luckily, that didn't affect Amy too much. Amy got the 195 close, and GameStop got 22.44 close. So good day for AMC and GameStop. Appy closed at 214.86, but is back above. Wild close, wild close. NVIDIA. Meta retested and bounced. NVIDIA closed at 211.80. Wow. Semiconductors were lit today. NVIDIA up 4%. MU up 4%. AMD up 2%. Intel up 4.5%. Intel did numbers. Maybe if you like this. Damn, we should have went balls deep Intel. We should have went balls deep Intel, bro. Intel's about to pump. Our side was oversold too. Look at that. All right, PPI is tomorrow, so it depends on PPI. If PPI is bad, market dump. If PPI good, market pump. It's plain and simple. PPI looks like it's gonna come out decent, but we have to see. The fuck is IWM doing today, man? If PPI is good, IWM does this tomorrow. There's no way it doesn't. There's no way it doesn't, bro. If PPI is good, IWM does this tomorrow, bro. There's no fucking way it doesn't, bro. If PPI is good, IWM moves. Gap fill tomorrow. SPY goes for the gap fill tomorrow. PPI's good. PPI comes out good. SPY goes for gap fill. We get paid. All right, so AMC 100% goes up tomorrow, not financial advice. Maybe like even a pump in the morning. Guys, thank you so much for the support today. So retest 193, then we bounce. All right, so SPY did recover, but it was a fucking crazy, shaky, wild recovery. But we did have a green day. Tomorrow will be green as well, but it highly depends on PPI. This is almost a bullish hammer candle, but it's really an indecision candle because it's pretty even on both sides. Which means PPI decides everything tomorrow. Scary. All right, so memes are ready to pop. Memes are primed. AMC and GameStop green week as predicted so far. SPY recovery as predicted, but what's next? And crypto is up decent. I'm doing the quickest video ever because I don't feel like doing one. I'm going to see if there's any buy orders for AMC. But it's taking so long. Sell orders. We have sell walls. Motherfuckers, dude, they're battling. So that's going to put more evidence that they're trying to battle us. We do have buy orders at 179 to 161. All right, so the AMC saga, the AMC battle. Okay, so AMC and GME are literally in a battle. Okay, we got this. Yo, what is up? You are back for another video with Data Zero. AMC and GME are literally in a massive battle. We're going to break that down right now. Also, SPY recovery as predicted, but what is next? And cryptocurrency is up. Daily outlook prediction, stocks and crypto. Let's go. So the first thing we're going to look at here is the meme stocks. Then we'll look at SPY in the overall market. And then we will look at cryptocurrency. Skip to what to interest you most, but I suggest watching the whole entire thing. The first thing we're looking at here is cost to borrow for AMC. As you guys can see, we have 10 million short shares for AMC. Cost to borrow of 1.49%. Remember, when cost to borrow goes up, price goes up. Cost to borrow skyrocketed, and we saw a jump in price today here for AMC. Remember, the higher the cost to borrow, the better, especially for meme stocks. Now, they did dark pool heavy here for AMC. Dark pool numbers were as high as 70% here for AMC. As you guys can see, dark pool sitting at 70.12% for these dark pool levels. Over 18.5 million shares were traded in the dark pool for AMC. GME cost to borrow sitting at 0.38%. Definitely want to see that higher. And then there are 8 million short shares available to short here for GME. Now, as far as AMC is concerned, we are definitely in a battle. Remember, I told you guys they do not want $2 because $2 calls will be in the money, okay? And it's an options expiration this week, so that will matter. People could start exercising their contracts, especially if they are in the money. So they're going to fight tooth and nail to try to keep us underneath $2. That's why they're dark pooling and sitting on 10 million short shares. You guys can see they have these sell orders here. Sell orders are sitting from 202 all the way to 194. Now, we have 8 and through sell orders before, but normally we need a decent amount of volume because we got to fight all of these manipulations. We got to fight the sell orders, them dumping short shares, the freaking dark pool, so they're taking away volume. If we have a decent amount of volume, so look for volume on AMC. That is one way we beat all of those things. So keep an eye on volume. It's very, very important, and it is a very, very fundamental thing if AMC is going to make a decent move to the upside. Now, we do have some buy orders as well here for AMC. If you go ahead and look at the 4-hour time frame, you'll see that there are buy orders for AMC sitting at 177 down to 160. So if we did pull back, I believe we would see a bounce to the upside. Now, as far as what we saw today, you guys can see we got this decent push to the upside, and I did say in yesterday's video that most likely AMC would be green today, especially if the market recovered, which it did, and you guys can see AMC had a green day. Now, again, even if you don't trade or hold SPY, you might want to watch the SPY section because this is going to affect AMC as well, what happens with SPY, IWM, and QQQ tomorrow as well. Now, AMC looks really good. We closed above 195. You guys can see we closed at 196. Very, very bullish. You want to see a hold of 195. If we are able to hold 195, the next major level is $2, and we will shoot to $2 very quickly. Look how we did it today. We broke above the 195 and then shot straight to 203. That same thing will happen if we hold 195 again tomorrow, all right? Now, if we hold $2, that's where things get interesting. We still have some major support and resistances before the gap fill, but I did buy some more YOLO calls dated for August because the calls that I have expire this Friday, so I'm going to need a new set of calls. So we did buy some calls dated for August, as I do think those will be sufficient enough to reach the gap fill. The gap fill starts at 228 to 272, and I believe this gap is going to get filled after we break and hold $2. We should shoot to like 205, 210 pretty quickly. And then at 210, that's going to be the last level before we can move up into that gap fill. So really, I'm excited at $2 and 210. And that's when we can start moving for the gap fill. And obviously, we need a little bit more time than coming up for this Friday. But if we do manage to break above $2 this week and hold it, we could get a gamma ramp. And they would have to hedge for those calls. and you could see a significant move to the upside. So that's why $2 is so important here for AMC this week. You guys can see that GME got a decent move to the upside as well. White dotted line prediction tracking very, very well. GME using the bands as support, getting a nice move to the upside. Green MACD here on the 4-hour time frame. You guys can see the 4-hour 20 moving average curling up. That's another thing for AMC. You guys can see that the moving averages here on the bigger time frames are curling up. Very, very bullish. It looks like both of the meme stocks are about to move to the upside. As you guys can see, GME was trying to reclaim 2250 today. If GME is able to break and hold 2250, similar to AMC, calls will go in the money, but even more importantly is $23. So 23.10 around that level. If GME is able to break and hold that, you're going to see a decent move to the upside, but the major level that we're looking for tomorrow is 2250. I do think we are going to break and hold that tomorrow, but you might see a little bit of pullback here for GME. RSI getting a little hot, not crazy, but getting a little hot on some of these smaller time frames. So we might need to see a little bit of pullback or consolidation before pushing up. Maybe tomorrow might even be a consolidation day because this was a very decent move to the upside. But if momentum continues and we are able to break and hold 2250, you could see that decent pop to the upside towards 23.10. Of course, if we hold $23, that's where things will get very interesting. But I do think both of the meme stocks are going to be moving up and having a green week this week. And so far, that is correct, as I told you guys in the weekly outlook prediction. So that's what we're looking at for AMC and GME. Now, remember, oil up, SPY down, oil down, SPY up. The conflict in the Middle East is starting to stir up. If you guys go ahead and check the news, you guys will see that Trump recently said he's going to drop the plan to surcharge ships, which I don't think anyone would have paid anyways. But he's going to restore the blockade. The market reacted to that. Oil reacted to that. Oil down slightly today, but still approaching that $80 a barrel level. You want to watch out for that. PPI drops tomorrow. This is what everything is riding on. You guys can see, even though we had a recovery here for SPY, it is really going to depend on PPI tomorrow. Now, we had good inflation report today, but you guys can see on the daily time frame, the candle is pretty much an indecision candle. We have wicks to the upside and downside, most of the buying right in the middle. PPI is definitely going to be a deciding factor on what happens tomorrow. Again, inflation came out along with market expectations and slightly better. You guys can see actually 3.5%, and then we were expecting 3.9 and 3.8. Very, very bullish, and then it was also lower than the previous. As far as PPI, you are expecting, okay, this is what you want if you're bullish. You want to see 0%. Or 0.1%, all right? Now, I even think if it comes out at 1.0%, it would still be bullish, but not as bullish as if we came out as aligned with the market's expectations of 0 or 0.1. Now, if we do get this or lower, that would be extremely bullish, okay? We might get it at forecast and consensus or lower. I dropped some information in the Discord, the same I did about inflation, what ChatGPT thought about everything, and ChatGPT was right about inflation. You guys can check that out in the day trade chat in the Discord. If you guys want to get in the Discord, hit me on my email, datazeroofficial5@gmail.com, $100 for a lifetime invite. So you guys can see here, we are waiting for that tomorrow. That's going to be at 8:30 a.m. And then we did stream the testimony. That's going to be continuing tomorrow as well. Now, as far as the technicals are concerned, we need to see SPY break and hold 752.68. If we are able to do that, we should push for 753. 753 is the major level. If we break and hold that, we should go to my targets of 754 and 755. Now, remember, I told you guys by Wednesday, I think we are going to be recovered to 754, 755. So those are my price targets for tomorrow, 754 and 755. As far as after hours are concerned, I think we're going to see some drawdown here, okay? I think we're going to see some drawdown, but heading into close of after hours, I think we're going to see a movement slightly back to the upside. Pre-market, okay? And if this is all going to depend on PPI, okay? If PPI comes out bad, it's going to dump. It's going to be bad. It's going to be really bad. But if it comes out good, we should see a bullish push to the upside around 8:30. Then you should see a sharp drop down in the morning, similar to what you saw here. You guys saw the bullish push. We saw the sharp drop down. Then we were able to kind of just grind our way to the upside, as you guys can see. We should see something very similar to that, but we should be able to reclaim 753 because we got bullish inflation, and then it would be bullish PPI as well, and potentially go for this gap fill. This gap fills at 754.15 to 754.85. Okay, that's a potential target for tomorrow as well. With the 754, 755, that's right in the middle. And that is what I'm thinking is going to be hit tomorrow for SPY. I am looking for a green day on SPY as well. Now, as you guys can see, IWM was extremely flat. Again, PPI is going to matter. If PPI comes out good, I believe that IWM could see a decent push to the upside in the morning because we did have this huge consolidation, but that's going to require things to go the right way. Apple did come down today. If it's able to break and hold 315, Apple could see some recovery to the upside. It does have a gap fill to the upside at 317.01 to about 317.48. So do be aware of that as well. Apple could be moving to the upside here, especially if the market does start to recover. NVIDIA, I told you guys about this one yesterday. NVIDIA absolutely pumped to the upside, making a huge rip and taking the market with it. And then also keep an eye on Meta. And another one to look out for is Intel. Intel actually looks really good here on the macro. We have this falling wedge, and I think Intel is going to be pushing to the upside over the next couple of days as well. So guys, make sure you hit the like button, subscribe. We go live every day talking about all of this stuff, trading, and giving you guys the news and information as it does become available. Crypto is up today. I am up on the crypto that I bought. I told you guys I'm accumulating heavy XRP, BTC, Ethereum. I'm focusing on those, and I'm condensing my portfolio. I still have Cardano, ADA, and Stellar, but I'm getting ready to move my Polygon and my Atom into either XRP, Bitcoin, or Ethereum. And I also started staking my Ethereum. Make sure you guys stake, not financial advice. If you are in crypto, you literally get interest on your crypto, and if the asset goes up, you get that money plus you get the staking money. It's a win-win, and it's a way that you can, keep your assets. Ethereum is tracking perfectly. Look at this. Nice push to the upside, tracking perfectly with my prediction. White dotted line, it's breaking the downtrend. I went in heavy on Ethereum. We are up on that now, and I think Ethereum is, dare I say, potentially bottoming, or at least setting up for a rally that could lead to the end of the overall downtrend. All right, so keep an eye on this, guys. Also, my Bitcoin prediction, if you guys check that out, it's calling for some upside here. So I think crypto is going to at minimum have a rally, maybe start bottoming early, but I'm still looking for Q4 2026 here for the bottom, and then 2027, 2028 for the bull run. All right, but I'm not waiting. I'm buying now. I'm accumulating now, and seeing what I just saw on ETH, I might buy some more ETH like ASAP because this thing looks really good, guys. So Ethereum looks prime. XRP also looking really good as well with the falling wedge, and then the MACD on the weekly time frame starting to go green. So we are approaching a bottom, guys. Crypto, fear and greed, as you guys can see, in extreme fear. Buy the fear, sell the greed. Bitcoin dominance sitting at 56.2%. If we do have a bull run, since the Bitcoin dominance has been coming down slightly, we could see a potential altcoin season finally, guys. So make sure you guys hit the like button, subscribe. This is your daily outlook prediction for stocks and crypto. If you found the video informative, leave a comment down below. But if you don't want to do any of that, make sure you do this most of all. Make sure you have fun. Make sure you stay safe. Make sure you make money. Peace out. All right, y'all. I'm out. Peace. Whew. Fucking crazy day, man. Down $12. It's unacceptable. Yes, bro, that downtrend break is insane. Look. I'm telling you, there's a reason why I bought a lot, bro. QQQ is definitely gonna break out. Oh my god, QQQ is gonna break out so hard if PPI goes good. It's gonna fucking go stupid. All right, guys, I'm out. Peace.